Okay. Good morning, everyone. Good morning, everyone. Welcome to Byju's Exam Prep IAS. This is Sham Kagodia. Now, before I start the discussion, if there is no issue with the sound, can you please give me a thumbs up so that we can start the discussion? I hope everybody is doing well, right? Everybody has had their breakfast, ready to listen to the Indian economy for the whole day now. I'm good, by the way. Those who are asking, thanks a lot. I'm good. Doing wonderful. So yesterday, what we have done? Yesterday, we started with financial market. That is the rest of the concepts in the financial market. What we have discussed in the financial market yesterday, we discussed a concept of IPO and FPO, initial public offering, right? Follow-on public offering. What is the primary market? What is the secondary market? Right? A BSE, NSE, etc., etc. After that, we discussed the concept of external commercial borrowings, ECB, external commercial borrowings. That is, Indian companies under the ECB are allowed to go out of India, borrow from external market, which is right specifically referred to as external commercial borrowings. Under ECB route, now 1.5 billion up to 1.5 billion dollars or equivalent value in terms of rupees you can borrow. What is the advantage? What are the concerns, etc.? We have discussed regarding ECB. After that, we have discussed P notes, participatory notes. What is a participatory note? These are the instruments which are needed by the foreign investors to invest in Indian stock market. And under the participatory note, they will not invest directly in India. They will invest through institutional investors. Then we have discussed concept of the ETF, exchange traded fund, or before that we have discussed mutual funds. Mutual funds are nothing but an instrument vehicle which will consist of wherein there is an investment in portfolio of instrument, right? That is a mutual fund company, asset management company will collect the investments and will use the investments to invest in either the stock market or in the bond market or in combination of different markets, different instruments. After that, we have discussed a concept of ETF, exchange traded fund. Exchange traded fund is basically a basket of security, right? It is a basket of security which you can purchase or sell in the market, right? That is, for example, we have equity ETF, right? That is in the ETF where only equity instruments are there. And we also have a debt ETF where in the ETF, bonds of companies, that is central public sector enterprises are there. In addition to this, we also discussed a concept of credit rating. Do you remember that? Credit rating. In credit rating, what is generally observed? It is a representation either in the form of alphabets or the combination of alphabets and numbers representing the credit capacity, that is a repayment capacity or capability of a borrower in the market. Right? For example, we have three agencies: Fitch, S&P, Moody's. These are the three very important rating agencies. And these agencies either will use only alphabets or combination of alphabet and number to represent what is the credit rating of a borrower. After that, we also discussed a concept of sovereign credit rating. Sovereign credit rating. Yes, CR, sovereign credit rating. What do you mean by sovereign credit rating? Whenever the credit rating is provided for the government, instruments of the government, that is called as a sovereign credit rating. And in connection to that, yesterday we have discussed, I hope remember, what is this downgrading of sovereign credit rating of USS bond and why it is having an impact on Indian stock market, why the equity market has actually taken a hit in the last two to 3 days because of a downgrading of USA. Right after that, we have discussed issues regarding corporate bond market in India. Corporate bond market in India. What are the issues? What are the reforms in order to promote corporate bond market? After that, we shifted to concept of international trade. International trade. Now, in international trade, what we have discussed? We have discussed idea of exchange rate. Right? What is exchange rate? Whenever you want to convert a domestic currency into a foreign currency, how many units of the domestic currency you will have to pay? That is called as exchange rate. Now, why do we require exchange rate? Can I say India is an open economy? Open economy means what? Whenever you have multiple transactions with the rest of the world, we call it as an open economy in the form of movement of labor, in the form of movement of capital, in the form of movement of machinery, goods, services, etc. India is an open economy, right? So there are a lot of transactions that will happen between India and the rest of the world. We need to convert rupees into dollar and vice versa, dollar into rupees. And that is the precise reason, right? We need to convert, we need to have exchange rate. Now, within exchange rate, I said there are three very important classifications or types of exchange rate, right? One is a fixed exchange rate where the central government, that is the government, will decide what will be the exchange rate. And second one is a floating exchange rate, right, wherein the demand and supply for the currencies will determine what is the exchange rate. And the third one is the managed exchange rate. In managed exchange rate, for most period of time in India, we allow the market to determine exchange rate, but continuous appreciation or continuous depreciation, it is not good for Indian economy. And that is the precise reason. Very often you will see that the Reserve Bank of India will participate and will try to stabilize the exchange rate. Right? That is the reason this is called as a managed exchange rate. Now, after that, what are the factors which will have influence over the exchange rate? What factors will affect exchange rate? And before that, we have discussed how RBI will stabilize exchange rate. Correct? How RBI will stabilize the exchange rate. That is, whenever there is a currency appreciation, that is continuously rupees appreciating, right? It simply means the demand for rupee is very high. RBI will start selling rupees, purchasing dollars. And whenever there's a continuous depreciation, it simply means a demand for dollar is very high. RBI will sell dollars and keep on purchasing rupees from the system. And I said, whenever these kind of events will take place, there is a danger that RBI, by selling more and more rupees in the market, might be stoking inflation in the market. Correct? I hope you remember that. RBI, by selling rupees in the market, might increase the supply of a rupee, and this might lead to higher inflation in the market. And that is the reason I said RBI, whenever there's a concern that this could cause inflation, this could increase the money supply, will also conduct open market operation and simply take out money from the economy. This, I said, is nothing but the concept of sterilization. This is nothing but the concept of sterilization. After that, what factors will have influence over the exchange rate? What factors will affect exchange rate? For example, we have discussed how interest rate will affect exchange rate. And in the context of interest rate, we have discussed what is the idea of a Fed tapering. Yes or no? Federal tapering, right? What is a federal tapering? How it will have impact on Indian economy, right? That is in the Indian stock market, what will happen? In exchange rate, what will happen? Right? We have discussed that. After that, we have discussed if there is a rise in the income, if people will start earning more and more, this will lead to higher import demand, and that will cause right impact on the exchange rate. Then inflation, how inflation will have an impact on exchange rate, how public debt will have impact on the exchange rate. Next one is a current account deficit, which we are yet to discuss. We'll discuss now, don't worry. Current account deficit, how it will have impact on exchange rate, how imports and exports, how speculation, etc., will have impact on exchange rate. Now, before I go forward, now please tell me, yesterday we have discussed current account deficit. Let me know, correct or not? Yesterday we have discussed current account deficit. Please do let me know. If you ask me, sir, when did you discuss yesterday? I was there in the full class. I've never heard you discuss current account deficit. Third session, right? A third session, right? Basically, after the tea break, I've discussed the idea of a current account deficit. Now, please tell me, if the current account deficit for India will increase, will it have an impact on exchange rate? Very simple. If the current account deficit increases, will it have an impact on exchange rate? Arey Baba, some of you are saying no. Why? If the CAD increases, Arey Baba, think no. Please think. Yesterday, we have discussed all of it. If current account deficit was, let's say, $50 billion, now this will become $500 billion. If current account deficit, right, was a $50 billion, now it will become $500 billion. What does it mean? Tell me, what does it mean? Can I say more and more dollars are flowing out of India? Yes or no? Right? More and more dollars are flowing out of India. And if more dollars are flowing out of India, don't you think that will lead to depreciation of rupee? Anybody has a problem with this? If more dollars are flowing out of India, what do you think will be the impact on Indian rupee? Do you think Indian rupee will remain stabilized? It will not have any impact on the exchange rate. Of course, yes. It will have a huge impact on exchange rate. That is, Indian rupee will start depreciating. Anybody has a problem with the current account deficit leading to impact on exchange rate now? Please do let me know. Yesterday, in one of the factors, right, if you want to know what I'm talking about, this is what I'm talking about. In one of the factors, I said that will have an impact on exchange rate is basically current account deficit. Country with a current account deficit will lead to outflow of the currencies affecting exchange rate. Any problem with this factor affecting exchange rate now? Can we go forward now? Can we go forward? Right. Apart from this, what else we have discussed? Right. So factors affecting exchange rate done and dusted. Now, right, the concept of nominal exchange rate and a real exchange rate. Nominal means whatever is the exchange rate today in the market, that is called as nominal exchange rate. Real means we are not comparing only currencies, we are also considering price levels of commodities between countries, right? That is, we are trying to compare what is the value of goods in one country with the value of goods in another country. That is real exchange rate, right? So that is the reason, if you have revised it, you would know that in real exchange rate, I've made a comparison of goods, right? Value of good in one country is equal to value of goods in another country. How, right? For example, how many bottles in India is equal to, right, how many bottles in USA, right? We have taken the same example yesterday also. One bottle in India is equal to how many bottles in USA. That is, we are comparing the price levels of commodities along with exchange rate. That is called as a real exchange rate. And I said nominal exchange rate will simply give you competitiveness of Indian rupee. Real exchange rate will give you competitiveness of trade, that is India's exports. After that, we have discussed the concept of nominal effective exchange rate, real effective exchange rate. Again, do not complicate it. Do not by heart calculations. Simple logic. Both are indices. Both are calculated by Reserve Bank of India. Right? What is the idea? In case of nominal effective exchange rate, we are comparing Indian rupee against a basket of currencies. Very simple. Do not complicate it. Nominal effective exchange rate, we are comparing Indian rupee with basket of currencies. Sir, why basket? Why not single currency? Because we are conducting trade with many countries, not only with one country. And that's the reason I said NEAR as an index. If the NEAR starts increasing, it simply means Indian rupee against basket of currencies is getting appreciated. If NEAR falls down, it is simply depreciated. Right? Rather than this, they will also use the term overvaluation and undervaluation. After that, we talked about real effective exchange rate. In case of real effective exchange rate, we are comparing basket of currencies, that is India against basket of currencies, along with the trade weight as well as the price level of the commodities, that is inflation in different countries. And REAR will give you competitiveness of trade, that is India's trade, whether this is competitive, more competitive or less competitive. I said if REAR increases, export competitiveness will come down. If REAR decreases, export competitiveness will increase. Then we started the discussion regarding balance of payment, idea of a balance of payment. What is the meaning of balance of payment? It is a record of all the transactions that, right, will be done between India and the rest of the world. Is it okay? It is a record of all the transactions that are conducted between India and the rest of the world. Who will prepare balance of payments for India? It is prepared by Reserve Bank of India. RBI prepares balance of payments. Now, the balance of payments, I said in case of India, RBI traditionally has only two accounts, but IMF says there has to be three accounts. One is a current account, another one is a capital account, and the third one is a financial account. And in case of India, current account is written separately, capital and financial account is merged into one, and we have only one account like this. After that, we have discussed balance of trade. That is when you talk about imports and exports, balance of trade, surplus, deficit, etc. Then we have discussed current account deficit, current account surplus, and balanced current account. Then we have discussed surplus in the capital account, deficit in the capital account. Now, final point, we were supposed to discuss the balance of payment deficit, balance of payment surplus. Now, what do you mean by balance of payment deficit? Right, please do let me know. Imagine the total revenue in the balance of payment is, let's say, $200 billion, and on the other side the total expenditure is, let's say, $450 billion. Please tell me now, starting now. Okay, so we are done with revision, we will start now. So the total revenue expenditure is $200 billion, and I'm sorry, revenue is $200 billion, and expenditure is $450 billion. As a result of this, please tell me, will we receive dollars into India, or we will spend more dollars, pay more dollars to rest of the world? Can I say this is a balance of payment deficit? Let me know. Can I say this is a balance of payment deficit? That is, we are receiving $200 billion and we are paying $450 billion, which means overall, right, we will pay $250 billion extra to the rest of the world. On the other hand, what if it is a $500 billion, revenue is $500 billion, and expenditure is a $450 billion? Now, can I simply say this is a balance of payment surplus? This is balance of payment surplus. A surplus means what? Extra $50 billion has come into India. India is receiving extra $50 billion from rest of the world, and both the numbers are equal. That is, let's say, $500 billion, $500 billion, which means from rest of the world we are collecting 500 billion, to the rest of the world we are paying $500 billion. So in that particular context, we'll simply say that the balance of payment is right, basically balanced. Balance of payment is a balanced, or balance of payment is a surplus, balance of payment is a deficit. Now, those who have read the newspapers, let me check. Those who have read the newspapers in the last couple of years, please tell me, is India facing first one, second one, or the third one? Let me see. Those who are reading newspapers, please do let me know. Those right who have read, it's very easy. Is India facing the first one, second one, or the third one? India is facing the first one, BOP deficit. Please check. Right? Please check. You will understand it. Right? The BOP deficit is there in case of India. Now, please understand, if there's a BOP deficit, can I say it simply means we have to pay more dollars to rest of the world compared to whatever dollars we have received. Now, question is, from where will you get these extra dollars? If I take arbitrary numbers, just hypothetical numbers, imagine the revenue is right, a same $400 billion, and expenditure is $450 billion, which means to the rest of the world I will have to pay extra $50 billion. So from where will you get this extra $50 billion? You cannot print dollars in India, right? RBI cannot simply say we have printing presses, we will print dollars. No, we cannot do that. So where do we get these extra dollars from? Generally, we take it from forex reserves. We will take it from forex reserves, because in forex reserves huge amount of dollars are present. We will withdraw it from forex reserves. Now, does it make sense to you why forex reserves in the last couple of years have started coming down for RBI? Let me know. Right, does it make sense to you? Right, when they say in the newspaper forex reserves in the last couple of years have started tumbling down, have started going down, because at one point of time our forex reserves were $650 billion, right? $550 billion, $600 billion. So forex reserves will be used to pay for these extra dollars, which we will have to pay to the rest of the world. Now, next important point, if there's a BOP deficit, we will draw down. We will simply take the dollars from forex reserves. Now, what if, think of this carefully. Here the BOP deficit is $50 billion and forex reserves are only $30 billion. Think of it now. You have the BOP deficit of $50 billion and your forex reserves are only $30 billion. Now, can I simply say, even after using all the forex reserves, there will be BOP deficit? Yes or no? Even after using all the forex reserves, there will be BOP deficit, which means even if you exhaust your forex reserves, you will not be able to fulfill the expenditure that you owe to rest of the world. This is called as a BOP crisis. This is basically referred to as BOP crisis. That is basically you are exhausting all your foreign exchange reserves, you are depleting all the foreign exchange reserves, and even after that there is a BOP deficit. This is called as a BOP crisis. Now, is India facing a BOP crisis in the recent times? Absolutely no. India doesn't have a BOP crisis as of now, but earlier, back in 1991, India faced a BOP crisis where we said the amount of forex reserves that were there with us, was sufficient to pay for imports of crude oil for 15 days. We had exhausted all of these forex reserves. The amount of reserves that we had were very, very limited, very, very low. So back in 1991, we faced a BOP crisis, but after that, no, we are not facing any kind of a BOP crisis. Even today, if you look at it, the amount of forex reserves we have is multiple times amount the BOP deficit, which means, right, because you are conducting trade in terms of dollars, you should have more and more forex reserves, right? So that whenever there's a volatility, so that whenever there is a need to intervene in the market, you will be using the forex reserves to, right, address all these issues. And recent times, please do let me know. In recent times, have you come across the newspaper articles where some of the countries do not have dollars to pay for imports? Let me know. Have you come across some of the countries where the countries do not have any dollars to pay for imports, or they do not have sufficient dollars to pay for imports? For example, have you come across Pakistan's situation, Sri Lanka's situation, right, where every newspaper article will tell you the same thing, that is, they are not able to import because they don't have dollars. Very simple idea. They are not able to import because they don't have dollars. They do not have sufficient dollars in the reserves now. So that is the importance of forex reserves. Please remember, forex reserves are very much important because we conduct most of the trade in dollars. Which means I will have to make a payment in terms of dollars. And because I need to pay in dollars, I can only receive dollars when we conduct these kind of transactions. I cannot print dollars. And that is the reason. Now, please tell me, I hope you understand why Government of India is promoting concept of internationalization of rupee. Have you come across this? Very, very famous now. Please do not search this topic in the book. In the book, it is not there. Have you heard of internationalization of rupee now? If you have read the newspaper in the last 1 month, you will know this. The term internationalization is very, very famous now. What is the meaning of internationalization? Simple. Imagine you're importing this bottle from USA. You're importing this bottle from China. You're importing this bottle from South Korea or Japan for that matter. You will not be paying the price for the bottle in rupees. You will pay the price of the bottle in terms of dollars. That is, whenever the trade is conducted, the invoicing, that is the payment for the trade, it is done in terms of dollars. Right? Around half of the global trade, generally it is done in the form of dollars itself. Now you might simply ask, sir, why dollars are used? Logic is simple. If you want to receive a payment, if you are the trader, if you want to receive the payment, Would you not want to receive a payment in terms of currency which is very stable, on which you have a very high confidence? Yes or no? I'll repeat the statement here. If you are the seller, you want to receive the payment, would you want to receive the payment in a currency which is not having any confidence in the market? That is, the international market does not have confidence over it. Or you want to receive the payment in a currency which nobody else will accept. You want to receive a currency which is very much volatile, unstable in the international market. Your answer should be no, sir. We do not want to accept a payment in such currency. And that is the precise reason historically, because the USA market is a global leader, right? USA is one of the largest economies in the global market. The dollar of USA has enjoyed very, very high confidence in the international market. And that is the precise reason most of the transactions are done or are invoiced in terms of dollars, right? Which means you import this bottle, you have rupees, you will convert the rupee into dollar, make a payment in a dollar. This is basically how transactions are conducted. Now, when you say internationalization of rupee, right? Internationalization of rupee, what is the meaning of it? Now, right? Imagine, second example now. Now, you will receive this bottle from USA, you will make a payment in terms of rupees only. You will not convert this into dollar, you will make a payment in terms of rupees. Now, can I say, please understand this. Now, can I say, rupee as a currency, rupee as a money is not only used in India, but is being used outside India. I hope you understand. Rupee as a currency, rupee as a money, medium of exchange, mode of a payment. If this is done, it is not only being accepted, used in India, but also outside India. Those who are saying no, are you able to understand the example or not? Some people do not even listen to me carefully. Right? Listen, first listen. You will receive this bottle from USA. You will give the person rupees. You will not convert the rupee to dollar. You will make a payment in rupees. Now, can I say, rupee is not only used in India for conducting trade, but rupee will also be used outside India for conducting transactions. Is it making sense to you or not? That is nothing but concept of internationalization of rupee. Internationalization means rupee will not only be used in India, but across the globe. In other countries also, they will start making payment in rupees. They will start accepting payment in rupees. For conducting transactions, they will start using rupees. This is called as internationalization of rupee. Now, please tell me, if rupee is internationalized, will you have any requirement of forex reserves? Let me know. If rupee is internationalized, right, that is, rupee will be accepted for making payments, receiving payments. Will you have any requirement of forex reserves now? No, you will not have requirement of forex reserves. Why? Just like dollar is being accepted in the international market, now people, traders, etc. will start accepting rupees. So if they start accepting rupees, why? What is the need to hold forex reserves? Right? So basically, the demand for holding forex reserves will actually start dropping down. Right? So that is basically the idea of internationalization of rupee. But please tell me, right? Is it easy to promote internationalization of rupee? Do you think it is very easy? You think USA will accept a payment in terms of rupees? China will accept in payment of rupees? Japan will accept a payment in rupees? No, that's not easy. That is the reason, if you have seen the newspapers, we are promoting internationalization. It will take a long period of time. Immediately, nothing will happen. Right now, only with those countries which are very small countries, very, very small countries, which have a very small amount of a trade with India, we are conducting trade in terms of rupee. That's it. Only with those countries who are very small trading partners with us, not large partners. For example, If you ask me, sir, who is a large partner, trading partner for India? USA, China, right? Germany, or for that matter, European Union. These are very large trading partners for us. Very, very big trading partners. We are not conducting trade in rupees with these countries because it will take long period of time. Immediately they will not accept it. But with other countries, smaller trading partners, right? We are conducting, right, a trade in rupees. That is basically the idea of a internationalization of trade. Okay, now come to the point here. Concept of a BOP crisis. Why should we maintain forex reserves? What is basically the idea of internationalization? Now let me add one more point here. Apart from the importance of the maintaining forex reserves, there is one more term related to forex reserves: import cover. Very often this is cited in the newspaper. Please be very careful. There's a term called as import cover. What is this idea of a import cover? Import cover basically means what is the value of monthly imports, what is the value of monthly imports to the value of forex reserves. How much forex reserves we have and what is the value of monthly imports. This is called as a import cover. For example, let's throw arbitrary number here. Imagine you have forex reserves of $250 billion. Imagine you have forex reserves of $250 billion and on monthly basis you are importing $20 billion worth of goods and services into India. Now please tell me, can I say import cover is 12 and a half months? Yes or no? Is it okay? Can I say import cover is 12 and a half months? 250 divided by 12. I'm sorry, 250 divided by 20. 12 and a half months. Now please think of it. Can I say if the import cover increases? If the import cover increases, that is considered to be good for Indian economy. I will repeat the statement. If the import cover increases, that is considered to be good for Indian economy. And if the import cover will start decreasing, that is considered to be a concerning factor for Indian economy. Now, please tell me, can I say if rupee will start depreciating, it will have a huge impact on import cover or not? Let me know. If rupee will start depreciating, will it not have an impact on import cover? If if crude oil prices, if crude oil prices, some of you are saying no. What is your argument? Please do let me know. It will have apply basic knowledge. If crude oil prices will start increasing, will it have an impact on import cover? If there is a BOP deficit, if there is a BOP deficit, will it not have an impact on import cover? Of course, yes. If there is a trade deficit, if there is a right current account deficit, all of this definitely will have an impact on the value of import cover. So that's the reason. Please make observations in the newspaper. They'll say import cover in the last couple of months, in the last 1 year, has started going down, which is a factor for concern for RBI. Because please understand the logic behind it. Import cover ratio, it's a ratio. What is the inference? Inference is how much currencies we have in the form of forex reserves, or what is the value of forex reserves. Using this, how many months of imports we can conduct. Very simple idea, right? How many dollars we have, or let's say what is the value of forex reserves. Using this, for how many months we can keep on importing goods and services into India. That is the importance of import cover. More the import cover you have, right, it will provide stability, it will provide certain, right, let's say cushion to Reserve Bank of India. It will provide certain cushion to RBI, because even if a Fed tapering is happening, etc., etc., higher the import cover, no doubt we will have sufficient amount of dollars to take care of impact of Fed tapering, also have sufficient dollars to cover for imports. That is basically the concept of import cover. Can we go forward now? Can we go forward? Okay, so this is basically the discussion regarding BOP crisis, importance of forex reserves, right? The idea of a import cover, right? So this is a balance of payment. Please be very careful. Questions are being asked in UPSC now. Now, how to take care of balance of payment deficit? right? How do you address the issue of balance of payment deficit? Promote more and more exports. Please tell me, is government of India doing this? Let me see. Is government of India doing the point number one? Promote more and more exports. Can I give you certain examples? Simple examples. Remission of duties and taxes on export products. We have a foreign trade policy. We have right, one district, one product, etc., etc. There are so many. I'm just giving you some example. There are so many reforms that are being undertaken by the government to promote more and more exports. Second one, decrease imports. Apply to current affairs. Apply to current affairs. Reduce imports. Right, so that automatically the balance of trade deficit will come down, current account deficit will come down, etc. Come to the third point, reduce non-essential imports. Don't say both 2 and 3 are same, right? 2 and 3 are different. Yesterday we have discussed what do you mean by non-essential imports. You can target only non-essential imports. That will also reduce that balance of payment deficit. Doing all of the above simultaneously, right? Promote exports, reduce imports, target non-essential imports. That is, do all of them simultaneously. Fifth one, encourage more and more FDI and FII. Please tell me, if I attract more FDI and FII, will we have a more dollars inflow into India? Can this higher inflow of dollars help me in reducing balance of payment deficit? Again, answer is simply yes. It should not be very difficult to you. Yesterday we have discussed all of it. Answer should be yes. Point number 6, go for currency devaluation. Right? Although countries don't do this, but one of the methods that you can use is go for currency devaluation. And please understand, when you go for currency devaluation, imagine for a country such as China. Think of it. For a country such as China, if China will go for devaluation, don't you think that will favor Chinese economy? Think of it. Please think of it. Now, please don't ask me what is meaning of devaluation. I hope you understand. Yesterday we have discussed a devaluation, depreciation. When currency will go for devaluation, what is the impact on imports, exports, etc. Yesterday we have finished it. If China will go for devaluation, what will happen to the value of exports from China? Don't you think exports will become very competitive? Already they are net exporter. Already they are net exporter. And if their exports will become much more competitive, what will happen to overall value of exports? Overall value of exports will suddenly skyrocket for them. On the other side, what will happen to value of imports to China? What will happen to the value of imports into China? The imports into China will become very costlier. Don't you think? Then domestic products would be preferred compared to imports from other countries. That is the reason, if you go for devaluation, can you basically address the issue of balance of payment deficit? Answer is yes. Has India done devaluation in the past? Yes. Right, back in 1991, when there was a crisis, during 91-92, we have gone for devaluation. Before that also, we have gone for devaluation. But post 1991 crisis, after the devaluation that we did during 91 crisis, after that, we have not gone for devaluation of the currency. Right? Why today? Right? Is it okay if I say today we are following a modified floating exchange rate mechanism in India? Let me know. We are following a type of floating exchange rate, that is managed exchange rate. And if you follow managed exchange rate, can you do devaluation of your currency? Let me know. If you're following a type of a floating exchange rate, can you go for devaluation of your currency? No, you cannot do that. Because floating exchange rate, although it is modified or managed, it simply means market will determine the exchange rate, not the government. You cannot devalue. Market will depreciate or market will appreciate the domestic currency. And finally, point number 6, long-term way out is always to promote more and more exports. Long-term way out is always to promote more and more exports. Because please understand, some of you will simply say, Sir, by importing also I can control balance of payment deficit. You're correct, but think of it. Some of you will simply say, sir, why did you write it as the solution, long-term solution is always to promote export? Why not by controlling import? Why not control balance of payment deficit? You can control balance of payment by controlling imports, no doubt. But please tell me, for India, which is a net importing country, do you think controlling imports can work out always in favor of India? Think of it, right? A country such as India, which is a net importing country, which is majorly dependent on lot of imports from rest of the world. Do you think the best way to control balance of payment deficit is by prohibiting imports into India? No, that is never the solution. That is never the solution. In fact, many of you will try to contradict. Many of you will simply ask a question to me, sir. In that case, why is government of India controlling the import of laptops? Why is government controlling the import of let's say this thing, that thing, etc.? Answer to this is very simple. Please tell me, have you come across the discussion regarding this in the last 3 days, where experts are saying government should have given certain time period, then maybe they should have imposed restriction on the import? Why? If government of India will give a time period of 4 months, 5 months, 3 months, the companies might invest more in India, ensure sufficient production capacity is there, or find out suppliers in the domestic market, get ready, and then you can impose a licensing regime on the import. Now, don't you think this is a very valid argument? Let me know. Don't you think this is a very much valid argument? Give them time. Tell them, from 1st of November, you will not be allowed to import. From 1st of December, you will not be allowed to import. Rather than simply say, from next month, you will not be allowed to import. Right? That is the argument. That is the argument. Ensure, give them time frame, ensure that they will have sufficient production capacity, suppliers in the domestic market, then start imposing restrictions. Now, please tell me, has government of India done the same thing in the context of PCs and laptops or not? That is, initially they said, from end of August, we will not allow you to import. Now what they're saying? We will give time till November, take time till November, finish all these imports, exports, etc. From November, I will put a restriction on this. This was there in the news. Please read that. Please read that. So that is basically the argument. But moreover, rather than controlling imports, if you promote more exports, don't you think, point number one, exports are going to happen from India, which means production in India is going to increase? Point number one is correct. Anybody has an issue with this? If we are going to export more and more from India, it means more production in India. If there is more production in India, what does it mean regarding employment? What does it mean regarding employment? Employment in India will also be very higher. What does it mean regarding investment in India? What does it indicate? Investment in India will also be higher. What does it say about India's GDP, gross domestic product? Gross domestic product would also be very higher. And if you are promoting more and more export, what do you think will happen to forex reserves in India? We will be able to build a huge amount of forex reserves. So don't you think, rather than controlling imports as a solution for BOPD, right answer will be promote more and more exports. Long-term solution will be promote more and more exports from India. That is the point I'm trying to make here. Any issue with this? Any issue? Please do let me know. Otherwise, I'll go to the next point. Any issue? What is the full form of BOP? Full form of BOP is balance of payment. My dear, we have been discussing balance of payment for at least around around 2.5 hours now. Again, since yesterday we are discussing balance of payment. So please focus. Please focus. In 2015, China devalued its currency. Then value is not dependent on market force at that time. That's what I'm saying, right? China goes for devaluation like this. That's the reason I took example of China here. India does not go for devaluation. China, although official line is they have not devalued, but please understand there is an allegation, right? USA alleges that, many other developed country allege that China goes for devaluation of their currency, but there is no proof of it. There is only allegation. In fact, this case was taken to IMF. Many member countries approached IMF, right? They approached IMF and argued that, right? They complained against China, saying that China has gone for devaluation of their currency. There was an investigation conducted. IMF said there is no proof of it, right? That is the reason there was no action taken against China regarding this allegation of devaluation of their currency. Done? Can we go forward now? Okay. Next, concept of convertibility. Idea or the concept of convertibility. Now, what do you mean by convertibility? Convertibility simply means how easily can you convert your domestic currency into foreign currency and vice versa. I'll repeat the statement here. What do you mean by convertibility? Convertibility means how easily, without any restriction, can you convert the domestic currency into a foreign currency and vice versa. This is the concept of convertibility here. Point number one. Point number two. Let me ask you a very simple question. According to you, what should happen? Should there be any restriction on foreign investors investing in government bonds, or there should not be any restriction on foreign investors investing in government bonds in India? Let me know. I'll repeat it again. According to you, what do you think should happen? Should there be any condition or restriction on how much foreign investors will purchase government bonds in India, or there should not be any restriction? Should there be any restriction or no restriction? Think of it. Please think of it. There should be restrictions. There should be conditions, my dear. There should be lot of restriction on this. Why? I'll tell you. You will only agree to my statement now. There should be restrictions on this. Why? Reason is simple. Imagine lot of foreign investors will bring money in India and they will purchase a lot of government bonds. Lot and lot of government bonds. And if there are no conditions, trust me, they will do that. If you ask me, sir, why will they do that? Please tell me, don't you think foreign investors, just like us, will have very high confidence on government bonds? If they have very high confidence in search of stable returns, will they not purchase a lot of government of India bonds? They will purchase. The problem is not with purchasing. We don't have problem with purchasing. What is the problem is what will happen after that. That is, let's say there is a Fed tapering. Simple question to all of you. Let's say there is a Fed tapering. Now, please tell me, if there's a Fed tapering, what do you think will happen to the foreign investors from India? The foreign institutional investors, don't you think they will sell lot of these securities in the Indian market, take their rupees, convert the rupees and take out dollars, invest in USA? Yes or no? Yesterday we have discussed Fed tapering. Yesterday we have discussed Fed tapering. So if there is a Fed tapering, what is the outcome of that in India? Foreign investors will take their money, go out of India, invest in USA. But in the process of doing this, please tell me what will happen to supply of bonds in India? What will happen to supply of government bonds? Don't you think supply of government bonds will suddenly increase? Some of you are saying reduces. My dear, say they will sell, no? Correct or not? They will sell government bonds in India. So supply will increase. And what will happen to market prices of government bonds in India? Market prices will suddenly crash. Don't you think this might happen? Think of it. Don't you think if there are no restrictions on foreign investment in government bonds, don't you think this could happen in Indian economy? Would you like a situation where market prices of government bonds will suddenly fall down like this? If market prices will suddenly fall down, don't you think that will set off panic in the market? That will create a panic. Every investor will be concerned. If government bond prices are falling, so fast, so quickly, that will set off a panic in the market. Everybody will start selling bonds. Everybody will start dumping instruments in the market. So that will create a lot of volatility in the market. All of you will agree this can happen? Please do let me know. All of you will agree this can happen. I'm not saying it is happening. Can this happen if there are no conditions, no restrictions on foreign investments into the bond market? Now, because there will be conditions, all of you know now, because there will be conditions, can I say in this context, right, the investment in bond market will come in the capital account of BOP. Right, I hope you understand. The investment in the bond market will come under the capital account of BOP. Right, point number 2. Point number 3, because it is under the capital account, we will impose certain restrictions of converting dollar into rupees in this capital account. Right, we will impose certain restrictions to convert foreign currency into a domestic currency in the capital account. This is called as partial convertibility. Look at this. This is called as a partial convertibility. Partial convertibility. What do you mean by partial convertibility? Please understand, partial convertibility means in all the cases, conversion of domestic currency into foreign currency and foreign currency into domestic currency will not be allowed. There will be certain conditions imposed. There will be certain restrictions imposed over converting domestic into foreign, foreign into domestic currency. All of you will agree what is the meaning of a partial convertibility now? Why do we require partial convertibility? And where do we have partial convertibility? Anybody has a problem with this? Let me know. Anybody has a problem with why there is a partial convertibility in the capital account? What do you mean by partial convertibility? And right, what is the concept of volatility or conditions being imposed? Can we go forward? Right? Can we go forward now? On the other side, look at current account. Right? On the other side, look at the current account. In the current account, imagine you are importing certain goods. Okay? Imagine you're importing certain goods. You will have to pay in terms of dollars. There is no condition on converting rupees to dollars. No restriction. Absolutely no restriction. You have imported goods worth $100, convert rupees into $100, make payment. On the other side, imagine you have exported. On the other side, imagine you have exported, which means you have received, let's say $100. Government of India says, take this $100, go to market, convert $100 into rupees as per whatever is the market exchange rate right now. Whatever is the market exchange rate right now, convert your dollars into rupees as per the current market exchange rate. Now, please tell me, in the example for importing and exporting, is there any restriction or condition over converting your domestic currency into foreign currency and foreign currency into domestic currency? Please tell me, is there any restriction? Absolutely no conditions, absolutely no restriction. This is called as full convertibility. This is called as a full convertibility. Government of India right now has full convertibility in the current account transactions and partial convertibility in the capital account transactions. I'll repeat it. Government of India right now has a partial convertibility. Partial means what? In certain situations, restrictions will be imposed. Conditions will be imposed. For example, look at ECB. Look at ECB, external commercial borrowing. You imagine you have a company in India. Can you borrow any amount of money under ECB? Think of it and please do answer. Yesterday we have discussed this. Under ECB, can you borrow any amount of money? Any amount of money, unlimited amount of money from external market? No. Don't you think there is a restriction on how much you're supposed to borrow? Until now, it was $750 million. Now it is $1.5 billion. Can you simply say, I am, right, I'm basically a citizen. I am, let's say, I'm owning a company. It is my company. I want to borrow $2 billion from USA. Will government of India allow you to do that? Absolutely no, under ECB. So under ECB, annual amount of borrowings is limited to $1.5 billion. So there is a condition, there is a restriction. Because there are restrictions, we'll call this as a partial convertibility. And if there are no restrictions or converting domestic into foreign, foreign into domestic currency, we'll call this as full convertibility. So please remember this. Current account is fully convertible in India. Capital account is partially convertible in India. Now, please tell me, if India wants to go for internationalization of rupee, don't you think first they should have full capital account convertibility as well? Think of it. If India wants to go for internationalization of rupee, if India wants to internationalize rupee, they should also have full capital account convertibility. Answer is yes, by the way. Don't say no. Answer is yes. They should have full capital account convertibility. Let me prove why. Imagine you want to pay in rupees. You want to pay in rupees when you import this bottle from USA, right? And when you pay in rupees, right, the USA seller will get rupees. Now imagine they will give this rupees to somebody else to invest in India. But in India, we have partial account convertibility in capital account. So do you think there will be higher demand for rupees in the international market? Let me know. I'll repeat the process here again. Please understand this. Please understand. Books will not give you this. Please understand. Imagine, rupee is an international currency now, which means not just in India, outside India also, rupee will be accepted for making transactions. Now you will import a bottle, you will pay in rupees to the exporter. Now imagine the exporter, right, wants to invest that money in India's debt market. Do we have partial convertibility or full convertibility, right, in the capital account? We have partial convertibility, which means whatever rupees that buyer has or seller has, if they want to invest in India, there are restrictions on those investments. There are conditions on those investments. So now tell me, will there be a higher demand for rupees in the international market? I hope you understand. Will there be a higher demand for rupees in the international market? No. Some of you are saying yes. How? I don't know, Baba. What you're understanding, I don't know. Right? If you have rupees, but there is a condition on where you are allowed to invest rupees, will you demand more of rupees? At least now this should be very clear to you. On the other side, you have dollars. On the other side, you have dollars. Can you take dollars, invest in USA market? Any part of USA market? Government of USA says yes. So now tell me, will you prefer payment in dollars or will you prefer payment in rupees? You should prefer payment in dollars because no restrictions on this. And that is the reason, remember this again. If India wants to go for internationalization of rupee, first and foremost, they will have to look into this capital account. They will have to address these kind of concerns of foreign investors. Otherwise, demand for rupees is not going to change. They are not going to demand huge amount of rupees because there are restrictions in the capital account. Now, before I go forward, please have a look at this. In the current account, earlier we had partial convertibility, but post 92 and 93, we have introduced full convertibility. I'll repeat the statement. In case of current account, earlier we had a partial convertibility, and after 92-93, we have introduced the concept of full convertibility. Earlier partial convertibility, how did we implement in the current account? There was a system called as liberalized exchange rate management system. There was a system called as liberalized exchange rate management system, LERMS. And this LERMS is also referred to as dual exchange rate system. Suddenly UPSC can use the term dual exchange rate system. LERMS was also referred to as dual exchange rate system. Now, what do you mean by dual exchange rate system? Let me explain it. Imagine you have exported this bottle to USA. You have received $100. You have received $100. Let me show you two examples here. Earlier under LERMS, what used to happen? I will write it here. And today, what will happen? I'll write it here. Then you can simply understand why it was referred to as a dual exchange rate system. Today, if you receive $100 and let's say the market exchange rate, that is a nominal exchange rate, is let's say hypothetically $1 is equal to 70 rupees. So you will take $100, go to the market, you will sell $100. Can I say you will receive 7,000 rupees? Anybody has a problem with this? You will sell $100, you will receive 7,000 rupees. Again, if you ask me technically, sir, will I receive exactly 7,000? No, you will not receive exactly 7,000, because if I am providing you this service, I will charge a certain commission. I will collect a certain commission from you. So you will not receive exactly 7,000, you will receive slightly lesser than 7,000 rupees. But under LERMS, what used to happen? The government would decide one exchange rate. Let's say $1 is equal to 60 rupees. And the nominal exchange rate, whatever was the exchange rate in the market, that was also used. Let's say $1 is equal to 70 rupees. Two exchange rates. One determined by the government, another, right, whatever is the nominal exchange rate. So what we used to do was 40% of the currencies that we have received, we would exchange it at government determined exchange rate, and remaining 60% of the currencies, we would exchange it as nominal exchange rate. That is, if you apply the basic logic here, 40% of $100 would be how much? $40. Yes or no? 40% of $100 would become $40. So for every dollar, we would get 60 rupees. So $40, you would receive how much? 2,400 rupees. 60% of $100 will become how much? $60. So for every dollar, we would get 70 rupees here, right? For $60, that would be how much? 4,200 rupees. So you would receive under LERMS, Liberalized Exchange Rate Management System, 6,600 rupees. Now please tell me, is it okay? Because if I say, if I'm using two exchange rates, is it okay if I say LERMS is also known as a dual exchange rate system? I'll repeat it again. Because I'm using two exchange rates to convert the domestic currency into foreign currency or foreign currency into domestic currency, because I'm using two exchange rate, can I say LERMS is also referred to as a dual exchange rate system? Any problem with this? Earlier, 92-93, we used to use LERMS. After that, we have shifted to the concept of full convertibility in the current account. So today, if you ask me, sir, currency, right, how it is converted in the current account, there is a partial convertibility. And currency, how it is converted, right, under the current account, there is a full convertibility in the current account. And those are asking, why did we have this system? Please tell me, 1991. Please tell me, 1991, what was the situation of forex reserves in India? Apply the logic, you will only understand. 1991, what was the situation of forex reserves in India? Don't you think we are facing BOP crisis? Forex reserves were fast depleting. So when the forex reserves will start depleting, don't you think government should have more control on how many dollars are going out of India compared to simply allowing the market to determine the outflow? That is the precise reason, right? We implemented a system wherein government would, right, have a say on this. Government decided forex reserves are very less. These are very precious to us. We should not allow all of them to flow out of India. So I will introduce two exchange rates where one I will determine. One, I will determine part of the conversion that will be used in the exchange rate. That is the reason we implemented liberalized exchange rate mechanism. But post 93, we have implemented full convertibility in the current account. Can we go forward now? Any issues with what I've discussed? Now remember one more committee here. There is a name of the committee. Suddenly UPC can ask you that. Tarapore committee. Very old committee. Very old committee. Tarapore committee. SS Tarapore committee. If they ask you which committee recommended full capital account convertibility, full capital account convertibility, is there any committee which has recommended full capital account convertibility? It is Tarapore committee. Remember this, SS Tarapore committee. Government of India set up a committee back in 1906 and 97, again post 2000, very old committee. This committee has recommended that we should have full capital account convertibility. Done? Can we go forward now? Any issue? Please do let me know. Can we go forward? This is the end of the discussion regarding balance of payments. Anybody has a doubt, any concern, right? Any clarification? If you do not ask me, I'll go forward now. Okay. Next, concept of foreign trade policy 2023. Concept of foreign trade policy 2023. Now, what is this idea of a foreign trade policy? It's a government policy. It's a basic policy of government of India. Using this policy, government will try to promote more and more exports from India. Right? More and more exports from India. We try to promote more and more exports from India. Now, earlier, please understand, earlier, generally the foreign trade policies were announced for a duration of 5 years. Earlier, we used to follow a foreign trade policy for a period of 5 years. But now, as per the latest foreign trade policy, we have discontinued this. Government says the new foreign trade policy will be open-ended. Look at the second point here. The new foreign trade policy will be open-ended. That is, there is no time period for this foreign trade policy. It will be open-ended. I repeat the point here. Please remember this. Earlier, we used to have foreign trade policies only applicable for a duration of 5 years. For example, we had a foreign trade policy from 2009 to 2014. We had a foreign trade policy from 2015 to 2020. Please tell me, look at the numbers and please tell me, can I say earlier foreign trade policies had a sunset clause of 5 years? Let me know. Can I say earlier foreign trade policies had a sunset clause, right? That is expiry date of 5 years. All of you okay with this? And can I also say these were close-ended? These were close-ended policies. Close-ended means these were applicable only for certain time period, only for 5 years. Now, Government of India says no requirement to have only for 5 years. Let's have a foreign trade policy, right? It will continue to be applicable. Whenever changes are required, we'll keep on making changes in the foreign trade policy. So point number 2, scheme is open-ended. There is no sunset date for this. And right, the schemes within this policy will be time bound. The schemes within this can be time bound, but the policy will not be time bound, right? The policy can be implemented, right? And we'll keep on making changes in the scheme. We will withdraw some of the schemes. We will implement some of the schemes within the policy of the same foreign trade policy. The foreign trade policy generally focuses on boosting India's export, and the target that Government of India has set up now, is $2 trillion by 2030. Earlier it was $900 billion. Now the target is $2 trillion by 2030. So these are certain important points, introduction points regarding FTP 2023. Now, what are the important areas that are being covered under this? What are the important areas? Point number 1, there is a point called as we want to shift from incentives to remission. We want to shift from incentives to remission. Now, what is this idea of an incentive to remission? Please understand this carefully. There is a scheme by the name of, I'll come back to this slide. Don't worry. Don't say you're skipping. I'll come back to this slide. There is one scheme earlier which was implemented by the government by the name of, I'll just give me a second, by the name of MEIS. Understand this carefully. Earlier, Government of India implemented a scheme by the name of MEIS. MEIS basically stands for Merchandise Exports from India scheme. Merchandise Exports from India scheme. This is a long form of MEIS. Now, what was the component? What was the important point regarding MEIS? Under MEIS, Government of India identified certain exports, that is obviously goods, which were exported from India, and based on the value of this export, certain incentives were provided to the exporters. Based on the value of export, incentives were provided to the exporters. Meaning what? Imagine you're exporting this bottle to USA. Value is, let's say, $100. Government would simply announce 5% incentives. 5% of the value of the bottle in the form of incentive to you. Now, 5% of $100 would be how much? That would become $5. So, government would simply provide you $5 worth of a coupon. Understand this very carefully. Government would simply provide you $5 worth of coupon whenever you exported this bottle to USA. Now, right, point number 2. This is MEIS. Point number 2, there is one agreement under WTO. Right, under WTO, that was the next concept that we'll cover. There is one agreement under WTO, World Trade Organization. Right, World Trade Organization. One agreement. That agreement says if a country per capita national income, if a country's per capita national income will cross $1,000. I'll repeat the statement. If a country's per capita national income crosses $1,000, then such country should not provide export linked subsidy. If a country's per capita national income crosses more than $1,000, then such country should not provide export linked incentives or export linked subsidy. Now, what do you mean by export linked subsidy? Answer to my question now. You exported $100 worth of bottle at 5%. How many dollars will you get in the form of incentive? Please do let me know. You exported one bottle. How much incentives will you get? You will get $5. If you export two bottles, how much incentives you will get? $10. All of you will agree? If you export 20 bottles, you will get $100. If you export 50 bottles, you will get $250 in the form of incentives. Now, please tell me, can I say this is a export linked subsidy? Let me know. Can I say this is nothing but export linked subsidy? Anybody has a problem with this? Anybody has an issue? Export linked subsidy means how much incentives you are getting, it is directly connected to the value of export you are doing. If you keep on increasing the value of export, you will get more and more incentives. This is called as export linked subsidy or export linked incentive. And as per WTO agreement, if a country's per capita national income crosses more than $1,000, that country should not be providing export linked subsidies. Point number 3. Since 2013, India's per capita national income is more than $1,000. I repeat, since 2013, India's per capita national income is more than $1,000. And finally, point number 4, India is a signatory. India has signed, India is a signatory to the agreement on subsidies and countervailing measures. Agreement on subsidies and countervailing measures. And what is the importance of agreement on subsidies and countervailing measures? I will write a short form now. This is also referred to as SCM. This is also referred to as SCM. This agreement on subsidies and countervailing measures is this agreement. The agreement on subsidies and countervailing measures is nothing but this agreement. Now, please look at all the 4 points and tell me, is it correct if I say India, by implementing merchandise exports from India scheme, was violating the provisions of SCM? Please look at all the 4 points. Please look at all the 4 points. Can I now say India, by implementing MEIS, merchandise exports from India scheme, was violating SCM agreement? So why will other countries be happy with it? Do you think USA will be happy with the policy of India? You think Japan will be happy with it? Korea will be happy with it? Of course no. What they did was they went to WTO, World Trade Organization, filed a complaint on India. What will happen? You will understand the story later. But please tell me, can you continue to implement such policies to promote exports? After all of this, don't worry about what happened to the complaint. I'll explain it later. Do you think India can continue to implement such policies to promote exports? The answer is no. Now, rather than this kind of a policy, a very beautiful policy has been implemented by the government, which is called as remission of duties or taxes on export product. So understand this, we implemented MEIS earlier. So there was a problem with MEIS. So do we have MEIS today? No, Government of India has withdrawn, suspended MEIS. And now there is one more type of a scheme, again to promote export only. Now the scheme is called as remission of duties and taxes on export product. Now let me explain how RODTP will work out. Understand the difference between MEIS and RODTP. Follow this very carefully. In RODTP, the logic is very simple. Imagine you're manufacturing this bottle. Okay? Simple follow argument here. Imagine you're manufacturing this bottle. You'll purchase 3 raw materials. You'll purchase 3 raw materials. A, B, and C. And let's say both A and B are covered under GST. They are under the purview of GST. And the third one, it is not under GST. It is not under GST, goods and services tax. Point number 1. Point number 2, let's say when you purchase a product A or raw material A, you will pay the taxes of 10 rupee. You will purchase raw material B, you will pay taxes of 20 rupee. You will purchase raw material C, you will pay taxes of 30 rupees. You will use all these raw materials, produce the bottle, and you want to export the bottle. You want to export the bottle. Now, please tell me, will you include this 10 rupee and 20 rupee tax in deciding your selling price? Let me know. Will you include? Listen to me very carefully. Baba, listen to me very carefully. Will you include the 10 rupee tax and 20 rupee tax on raw material A and B in deciding in your selling price? Will you include that? My dear, those who are saying yes, wrong. I'll tell you why. Those who are saying yes, you have forgotten a basic point. Whatever taxes you have paid under GST, will you not receive input tax credit on it? Already forgotten. 2 weeks ago, we have discussed this. Let me know now. Whatever taxes you have paid under GST, will you get the input tax credit or not? Alright, tell me. Right? Have I discussed this or not? Under GST, did we discuss it or not? right? So you have paid a tax of 10 rupee here. You have paid a tax of 20 rupee. Will you get ITC of it? Yes, you will get ITC. You will get ITC of 10 plus 20, 30 rupees. So when you decide your selling price, will you include this 10 plus 20 in your market price? You will not include. But on the other hand, please look at raw material C. Please look at raw material C. Is it under GST? Question number one. Is it under GST? I've written it. Don't ask me. You tell me. Is it under GST? No. And when you purchase raw material C, did you pay taxes on it? Of course, yes, you paid a tax of 30 rupee. Now, will you get ITC of it? Let me know. Will you get the 30 rupee ITC? You will not get ITC of 30 rupee. Because you are not getting the ITC of 30 rupee, now can I say you will include this 30 rupee tax when you decide the selling price. Does it make sense to you now? Will you not include this 30 rupee when you decide your selling price? Now please understand, after considering cost of labor, profit, etc., plus 30 rupee, you decided that you will export the product, right? You want to earn, let's say 200 rupees. You want to earn 200 rupee. Now can I say out of 200 rupee, 30 rupees tax? Yes or no? Out of this 200 rupee, can I say 30 rupee is this a tax? Anybody has a problem? Out of 200, 30 rupee is because of this tax. This is called as embedded taxes. This is called as embedded taxation. Embedded taxes. Embedded means which are part of the prices. Within the price, there is certain component of taxes. Embedded taxes. Now, question number one. If there is an embedded taxation, please tell me, will your products be more competitive or less competitive in the international market? Think of it. If there is an embedded taxation, will your products be more competitive or less competitive? Don't you think they'll be less competitive? Some of us say more competitive. How? How, my dear? If these are right embedded taxation is there in your market price, right? Your market price will be higher. If your market price is higher, competitiveness will come down. Since yesterday we are discussing the same thing. But even then, some of you are making a mistake. I do not understand why. Right? So it is a less competitive. Point number one. Point number two, if I remove the embedded taxes, can I increase competitiveness? Let me know. If I basically remove the embedded taxes from the system, somehow, how we will do it? Don't worry. If I remove the embedded taxes, can we promote competitiveness of India's exports? Will that help us in promoting more and more exports? Answer is yes. And point number three, think of it. Point number three, if I remove embedded taxes in the selling price of the product, I repeat, if I remove the embedded taxes from the selling price of the product, can I call this as zero rated export? Can I call this product as a zero rated export? What do you mean by zero rated export? Let me give a very simple example. Out of 200 rupee, I said 30 rupees embedded tax. Correct? Out of 200 rupee market price, 30 rupee is the embedded tax. Now, if I remove that embedded tax also, what will be the price of the product? 170 rupees. Now, please tell me, out of this 170 rupees, is any of it in a part of or in the form of a tax? Think of it. Out of this 170 rupees, is anything, any single rupee out of it, is it because of taxation? No. Whatever taxes were there, we already have taken it out. Now, can I simply say this product is zero rated? Is the logic okay? Can I say this product is zero rated? And if there are zero rated exports, don't you think the competitiveness of these exports would increase? Anybody has a problem with what I've discussed so far, please do let me know. Can we go forward now? Anybody has an issue with what I've discussed so far in the concept here in the slide? This one, please do let me know. Argument is very simple. There are certain taxes which are not remitted back, which are not given back. right? For example, here, taxes that you pay on A and B, these are covered under GST. So you will get the input tax credit. But the product C, it is not under GST, which means the taxes of 30 rupee that you pay on product C, you will not get ITC. And because you are not getting ITC, this will be referred as embedded taxes because you will include this 30 rupee when you decide the selling price of the product. And this will reduce the competitiveness. Now, under RODTEP, look at the name. Please look at the name now. Remission of duties or taxes on export product. Right? Remission of duties or taxes on export product. Meaning what? Whatever duties or taxes which are embedded. I'll repeat. Whatever duties or taxes which can be classified as embedded taxes, now government will simply give it back to you. Government will return it to you. How? Just give me 1 minute. Government will give this 30 rupee back to you. In this example, 30 rupees embedded tax. Government will return that 30 rupees to you. Now, if the government is giving 30 rupees tax here, already you have got a 10 rupee ITC, 20 rupee ITC, right? Don't you think selling price will not include any taxes? And if a selling price does not include any taxes, it means embedded taxes have been removed. Trade competitiveness, export competitiveness automatically will increase. Right? Now, please tell me, third question to all of you. Am I giving the taxes in return or am I giving incentives here? Think of it carefully. Am I giving the taxes in return or am I giving incentives here? Arey Baba, think logically. I'm explaining the same thing. Am I giving the taxes, embedded taxes in return to the exporter or am I giving incentives here? Those who are saying, sir, I'm giving incentives, how? Tell me. Let me see what you're understanding. Right? I'm saying embedded taxes are given back. The taxes which were there in the system, they are given back to you. How can you call this as a subsidy? How can you call this as a incentive? Anybody has an argument, please do let me know. Because Government of India says, no, this is not incentive. Incentive means what? You have produced more, congratulations, take it. Do you understand the term incentive at least? Right? For example, if you're working in private sector companies, right, you have generated huge profit for the company. Company says, take, because you have worked very well, part of it, I will give it in the form of incentive to you. Here is the Government of India giving incentives. No. Government of India says, you already have paid taxes. I'm returning the taxes to you. Simply take it back. Right? That is the concept here. So please tell me now, at least tell me now. By providing these embedded taxes back, is Government of India violating SCM? Let me know. By providing these embedded taxes back, is Government of India violating agreement on subsidies and countervailing measures? Right? All of you understand? Answer is no. Government is not violating. That is the reason right now we have RODTEP. All of you have understood the difference between MEIS and RODTEP. In MEIS, we provided incentives which was directly connected to the value of the product. Right? That was called as export linked subsidy. Hence, right, it was violating SCM, we have withdrawn it. But now what we have done? Under RODTEP, Government of India says whatever embedded taxes are there, we will give it back to you, right? So that in the export market price, no taxes will be included. And that will basically mean you are having zero rated export. And zero rating of exports means we are promoting competitiveness of India's exports. This is basically how RODTEP is being implemented now. Now, next important point. I said 30 rupee embedded taxes will be returned, will be given. In what form? Please remember this. RODTEP or MEIS, both of them. Under RODTEP or MEIS, we will not give money in return. Right? Either you talk about MEIS or RODTEP. They will not give you cash. They will not give you 30 rupee cash like this. No. they have a certificate. There is a certificate by the name of scrip. Understand this. They will issue a certificate, and this is technically referred to as duty credit scrip, right? A duty credit scrip. Now, what do you mean by duty credit scrip? Let me give a very simple example. Can you see a notepad that is there in my hand now? Let me know. Can you see there is a notepad in my hand? Otherwise, a notepad is shining. I cannot see it. Let me take a paper out of it. Okay. Can you see a piece of paper which is there in my hand? Everybody, please participate. Can you see a piece of paper which is there in my hand? Now, this is called, right? This is called as a duty credit scrip, or let's say it's a certificate. And now please tell me how much is the value written on the certificate. I'll show it now. How much is the value written on the certificate? How much is the value you can see on the certificate? Please look at this. Please look at the piece of paper in my hand. Don't worry about earlier example. Look at this example. This certificate, can I say it's valued 100 rupee? So imagine, I was supposed to get 100 rupee under MEIS incentive, 100 rupee under MEIS, or second RODTP, the remission, that is the taxes, embedded taxes worth 100 rupee. So government of India will not give me 100 rupee cash. They will simply hand over this a piece of paper to me and say the value of this certificate is 100 rupee. Now, what is the use of this piece of paper? What is the point of having this piece of paper? Imagine I will import something right after 1 week. Imagine I'll import something. So when I import something, I will have to pay taxes to government of India. All of you okay with this? I will have to pay certain taxes to government of India. Let's say I'm supposed to pay 100 rupee tax to government of India. So instead of paying tax from my side, I will simply take this certificate, give it to the government. So this certificate will have a value of 100 rupee. I will simply give this certificate to government of India. So this was the use of duty credit scripts. This was the use of duty credit script. Earlier, please understand, earlier under MEI scheme, physical, that is in form of pieces of paper, duty credit scripts were issued by the government. But now under RODTEP, government doesn't provide a physical document like this. Digital copy, that is basically a digital version of it is given to you. You can use it whenever you have to pay certain duties to government of India. So this is how RODTP will work out. Any issue with this, please do let me know. Any issue with all of this, please do let me know. And there's a name of the committee, GK Pillai Committee. Remember this. The government of India set up a committee, GK Pillai Committee, to recommend how RODTP should be implemented, what should be rate of RODTP. Because I hope you understand. Do you think, please think of it. Do you think the embedded taxes in both of these products will be same? Think of it. How many of you think embedded taxes in both of these products will be one and the same? Of course, no. Right? Embedded taxes will be different. So from one product to another product, don't you think you will have a different rate of remission? All of you will agree with me now? From one product to another product, you will have different rates, right, for remission. So that's the reason Government of India had set up a committee, GK Pillai Committee, to give recommendation regarding RODTP. And what kind of taxes, embedded taxes will be covered? If the embedded taxes are at a local level, that is, let's say you have paid certain municipality taxes and you have not received a refund of it, that will be considered embedded. You have paid certain taxes to the state government, you have paid certain taxes to central government, you have not received any input tax credit, all of them, that is at local, state and central level, all of these taxes will be counted as embedded taxes. Done. So this is basically RODTP. Now please tell me, does it make sense when you read a statement like this? When you read a statement like this, incentives system to remission system. Under foreign trade policy, the government says We want to shift from system of providing incentives to the system of providing remission. Do you understand what the government of India is trying to convey here? Can we go forward? Let me know. Can we go forward? First point is okay with all of you? Come to the second point, ease of doing business. Under the foreign trade policy, government of India is promoting ease of doing business. For example, they have implemented various reforms which will help you in which will help you in getting licenses much more easily. They have implemented GST, which is again ease of doing business. They have reduced the corporate taxes of 15% on some of the companies that will start manufacturing this year. All these are nothing but reforms in promotion of ease of doing business. Point number three, export promotion initiatives. Export promotion initiatives. For example, can I say PLI, production linked incentive? One of the outcomes we are expecting from PLI is export promotion. Let me know. We have not discussed PLI. I know that. We'll discuss it later. We'll discuss it. Please don't worry. Next week, we'll discuss Make in India, Startup India, PLI. We'll discuss. But please tell me, can I say PLI? One of the objectives is to promote exports from India. Right? Make in India. Promotion of exports from India. One district to one product. Right? Promotion of exports from India. So various reforms have been implemented to promote more and more exports from India to rest of the world. We are also promoting manufacturing in India, right? The best example that I can give you in recent times is government of India trying to control the import of laptops, personal computers, tablets. Why? So that manufacturing can be promoted in the domestic market. PLI, boosting manufacturing in India. Startup India, Make in India, right? All these are promoting manufacturing in India. E-commerce exports, right? E-commerce exports. We want to promote as much as possible e-commerce, that is a digital commerce. Through using digital commerce, we want to export more and more services out of India. E-commerce exports. Exports from the districts. In fact, regarding exports from the districts, we'll discuss one initiative of Government of India. One district, one product. Have you heard of this? Let me know. Right? Have you heard of one district, one product, ODOP? Right? We are implementing this in order to promote more and more exports from each of the districts in India. What is that? How we are doing it? Right? What is the importance of this? We'll understand it later. Please have patience. Now, SCOMET policy. This is a very, very new concept, a SCOMET policy. Right? What is a SCOMET policy? SCOMET basically stands for the chemicals, organisms, materials, equipments and technology. Right? It is basically an agreement. It is a SCOMET policy. It is an agreement between multiple countries where we are trying to streamline. We are trying to streamline import and export of certain chemicals, certain organisms, certain technologies, certain equipments, etc. That is called as a SCOMET policy. Now, why this SCOMET policy was actually required? Now, have you come across a term called as a dual use technology? Let me know. Have you come across a term called as a dual use technology? If I want to give you the best example of a dual use technology, what about drones? Tell me, can we use the drones for civilian purposes? Can we use the drones even in the defense sector? Yes or no? What about nuclear energy? Those who have seen Oppenheimer, right? Atomic bomb, nuclear energy related, right? Don't you think nuclear energy, right, can be used for civilian purposes also, for security, that is for defense purposes also? So argument is simple. There are a lot of dual use technologies, dual use organisms, etc. We need to have a certain very comprehensive policies to either import as well as export. That is collectively covered under the concept of SCOMET policy. Okay, India is actually implementing the SCOMET policy now. Done. So these are certain very important points regarding foreign trade policy 2023. Can we go forward now? Anybody has any issue regarding what we have discussed so far? Let me know. Anybody has any issue? SCOMET full form, streamlining the import and export of chemicals, right? Chemicals, organisms, right? Let's say materials, equipments, and technology, right? That is SCOMET. RODTP full form, it is there in the slide only. Please have a look at it. Partial convertibility, partial convertibility basically means there will be, right, there will be certain restrictions over converting your currency into foreign currency and foreign currency into domestic currency. And there are two or three students who keep on saying, sir, I'm asking question, you're not answering. I have already answered it, but you don't listen. And what should I do? Did I not say what is the meaning of partial convertibility? Let me know. If I've not explained, that is my mistake. I will agree to it. That's my mistake. But can I simply say that I've told you what is the meaning of partial convertibility? I said, in fact, I gave you examples also. I said you cannot allow all the investment from the foreign countries to be made, right, in the market, in that is in the debt market. If that is done, it will create a lot of volatility in India, and that is the reason I said certain restrictions will be imposed. Certain restrictions will be imposed. You cannot allow all the investments to simply flow into the debt market. Right? So if I'm imposing restrictions, is it not partial convertibility? Of course, yes. Okay. Done. So any other questions? Any other question? Who will give embedded taxes to manufacturer? Government. Government will provide embedded taxes to, right, manufacturer. If exports will help, then why India is banning export of wheat and rice? My dear, it simply shows that you are not reading current affairs. Forget about reading current affairs. Please tell me. Other students, please tell me. If I'm wrong, correct me. Have I not given you articles in the last week, not this week, last week, where I had given certain articles regarding why government of India is banning wheat exports, rice exports? Please tell me. If I've not given the answer in the classroom in the earlier classes, or if I've not given any article regarding this, tell me. Right? I'll accept my mistake. But please understand, it shows that you are not reading. I've given all of this information. You are not revising, you are not reading. Argument is simple. If government is going to allow more and more export of rice and wheat now, supply in the domestic market is expected to go down. And when supply will go down, that will contribute to inflation in the domestic market. Right? That is the reason government now is banning export of wheat, it is banning export of rice, it is banning export of sugar, etc., etc., etc. Please read, my dear. Please read. I'm concerned about some of the students because they are not even listening. They are not even reading the articles that I'm giving. Okay. Anything else? Anything else? Why can't all countries have the same currency? Which currency? According to you, when you ask a question, why not all the countries have the same currency? Which currency would you propose? For example, will you accept US's currencies in India for all transactions? Tell me now. Will you accept, right, dollars in the domestic market? Or will USA accept rupees in their domestic market? No, everybody has their own currency. Nobody will accept foreign currency in all their transactions. Okay. The classes we have on weekends are the classes from starting of the syllabus of economics or continue with the syllabus, because we already had our echo class 1 month before. My dear, whatever batch you are there, right? So we are having the same discussion, same syllabus discussion, but from one batch to another batch, there'll be a slight difference because I keep on dumping lot of current affairs in the classroom discussion. So there'll be a slight discussion. Okay. How does rebate differ from RODTP? Rebate simply means they will give you money, right? For lot of times, you will get income tax rebates, you will get corporate tax rebates. But in case of RODTP, they're not giving you money, they're giving you scripts. They will use the term remission there. Okay. Done. Can we go forward now? Okay. Let's go next now. Concept of World Trade Organization. Very important. Very important. Concept of World Trade Organization. WTO. World Trade Organization. Now, what is this idea of a World Trade Organization? Let me explain. Understand this very carefully. Before World Trade Organization, that is a WTO, started functioning from 1995. WTO started operating from 1995. Before WTO, there was one more organization, not even organization, it was an agreement. There was an agreement called as GATT. GATT simply stands for General Agreement on Trade and Tariff. General Agreement, General Agreement on Trade and Tariff. General Agreement on Trade and Tariff. GATT. Now, what is this GATT? Why did we have the concept of a GATT in the first place? Now, please tell me 1940s. 1940s, can I say one of the very important events that took place during 1940s was Second World War? Correct or no? During 1940s, right, one of the very important events in the sense, right, something that affected the global market was Second World War. During the period of Second World War, it was realized that international trade has been disrupted. Infrastructure investment, right, has been affected. Loss of infrastructure has taken place. Right, there is no control on the currencies, right, in the international market, etc. So what was decided was during 1940s, right, 44, 45, there was a conference called as Bretton Woods Conference. There's a conference called as a Bretton Woods Conference. Sir, what do you mean by Bretton Woods here? Bretton Woods is name of a city. Very simple. Bretton Woods, it is name of a city in USA. So there was a conference very famously referred to as a Bretton Woods Conference. And during the Bretton Woods Conference, it was decided that we should have three very important organizations. Right? Global organizations. Multilateral. Multilateral means multiple countries will be members. We should have three global international organizations. The first proposal was we should have World Bank. We should have World Bank. And what would be the role of World Bank? It will provide loans for infrastructure development. It will provide loans for growth, development of countries. We should have World Bank. Second one was International Monetary Fund, IMF. International Monetary Fund. And the role of IMF was very simply to promote and regulate, right, the exchange rates. Across the globe, we want to regulate in the sense we want to see how countries are, right, having exchange rate policies. If any country faces a BOP issue, we will provide assistance to them. That was the role of IMF. And there is a third international organization that was proposed, International Trade Organization. International Trade Organization, ITO. International Trade Organization, ITO. But please understand this. All the countries did not come to a consensus regarding ITO. Many countries were opposed to some of the discussions that were taking place in ITO. For ITO, USA opposed, right, many of the things that were being discussed. As a result of this, no consensus was made for ITO. Hence, we did not set up International Trade Organization. ITO was not established. On the other side, we were able to make consensus or get consensus regarding World Bank as well as IMF role, function, authority, structure, etc. As a result of this, World Bank was established as well as IMF was established. Now, please have a look at it. Three organizations were proposed. One of them was not set up. Two were set up. That is the reason these two are referred to as Bretton Woods twins. All of you understand the meaning of this now? That is the reason these two are referred to as Bretton Woods twins. But the International Trade Organization, which was proposed to be set up, right, there was no consensus. We were not able to set it up. The role of ITO, right, as per the proposal, the role of ITO was to promote global trade, was to basically promote international trade. But because we do not have ITO, that is the reason for a temporary purpose, for certain time being purpose, we implemented an agreement by the name of GATT. Is the logic okay with all of you? For temporary purposes, for time being, we said organization, right? We are not able to set up. So at least for time being, let's have an agreement by the name of GATT, General Agreement on Trade and Tariff. And over a period of time, negotiations have been conducted. GATT has been subsumed into a larger organization, World Trade Organization, from 1995. From 1995. Any problem with right understanding the historical background here? Any problem? Can we go forward? We will discuss IMF later. We'll discuss WTO now. World Bank will be covered under international relations discussions. Let's start. Why did we move away from GATT? Why did we basically subsume, right? Why did we subsume GATT under WTO? What was the reason? Point number one, there was no organization under GATT. Organization in the sense, there was no organization structure, there were no committees, there were no system under GATT. What was GATT? GATT was basically an agreement. I hope you understand. GATT was not an authority. GATT was an agreement. Right? So GATT is an agreement, whereas the World Trade Organization is an authority. And under World Trade Organization, there have been multiple agreements which have been signed by members of WTO, including India. Including India, there have been multiple agreements which have been signed under WTO. So don't you think organization is a much larger, much better structure compared to having only one type of agreement like this? So first point is WTO has a structure. It is an organization. GATT is an agreement, does not have any kind of organization. Point number two, GATT was focused on goods. GATT was concerned about regulating promotion of goods, whereas a WTO will cover goods. We'll discuss this separately. There are agreements. Have patience. Will cover goods, will cover services, and WTO will cover even the intellectual property rights, IPRs. There is an agreement for IPR also, intellectual property rights. So now can I simply say the coverage under coverage under WTO is much wider compared to GATT? Let me know. The coverage under WTO, it is much larger, much wider compared to coverage under GATT. Yes or no? Can I go forward? This is point number two. Point number three, right? Number of countries which were there under GATT. Number of countries which had signed GATT were very few compared to WTO. Right? Under GATT, 120 member countries were there by 1994. Today, if you check WTO, more than 160 to 170 member countries are there under WTO. Right? So obviously the coverage of members under WTO, the global coverage, it is much higher under WTO compared to GATT. And point number four, dispute settlement was very slow. Right? Dispute settlement in many of the cases did not even complete because right, one of the parties in the dispute opposed the dispute settlement. Now question is, what do you mean by dispute settlement? We will discuss this separately. WTO dispute settlement is very important. We'll have a discussion. Have some patience with it. So these are some of the reasons why we shifted from the concept of a GATT to the concept of a World Trade Organization. Now, what is the role of WTO? What is the function of WTO? First one, various trade agreements which have been signed, they will have to be implemented. Right? We have signed multiple trade agreements. For example, you will ask me, sir, what kind of agreements we have signed? There is an agreement on agriculture. There is an agreement on agriculture. Very, very famous in the context of India. We'll discuss that today. AOA, agreement on agriculture. Very important. There is an agreement on subsidies and countervailing measures. Yes or no? Just now we have discussed some time ago. Agreement on subsidies and countervailing measures. There is a TRIPS agreement. Don't start asking me about TRIPS, TRIMS, etc. We'll discuss it in some time. There is a TRIMS agreement. There is a GATS agreement. So have a look at this. Multiple agreements are there. India signed all of them. Most of the countries around the world have signed all of them. So, which is the authority which will ensure that these agreements are implemented? It is the WTO, World Trade Organization. Second one is this will act as a forum for trade negotiations. WTO will act as a forum for trade negotiations. Right? Please tell me in the last 1 month, have you come across these articles or not? India is right opposed to the subsidies given by this country. USA is opposed to subsidies given by India, and that was voiced at a WTO. India wants a permanent settlement on a public stock holding. If you have not come across it, then you are not reading newspapers correctly. Trust me, you are not reading the newspapers correctly. Because if you do not know it, please type it in the Google. Please type it in the Google. India wants a permanent solution for public stock holding. Trust me, it was there in the newspapers in the last 1 month. So argument is what? If you have not read it, please read it at least after we complete the WTO and discuss the what is the issue. So it will act as a forum for trade negotiations between member countries. It will also settle trade disputes. How? We will cover it separately. Just wait for some time. It will also review what are the trade policies of member countries. How member countries are implementing trade policies. Are the trade policies promoting more exports and reducing imports? Is the government of India having a policy where they will restrict imports but they want to promote more and more exports? Will government implement any policy in the form of higher taxation on the imports coming into India? So review the trade policies, right, of various member countries. So these are the various functions of World Trade Organization. World Trade Organization. Right? WTO has started working from 1995. The headquarter of WTO, it is there in Geneva. Right? And these are the functions of WTO. These are functions of WTO. Any problem? Can we go forward? SCM full form. My dear, right? This is very bad. Very, very bad. Why? Did I not write the full form of SCM earlier? I don't know what you keep on looking at. I absolutely have no idea. Why? If I write something for the first time, right, in a short form, either I will write it later in a full form or I would have already written in a previous slide. Please tell me, did I not write the full form of SCM earlier? I don't know, Baba. I don't know what you keep on looking at. I absolutely have no idea. Right? Which again, I will understand one fact. You are not focused. You are not concentrated in the classroom. I'll understand that as a fact. Okay. Second point with an example. Have you not seen the list of articles that I've given yesterday? Let me see. Let me ask you a counter question. Always you people ask me questions, right? Let me ask you a counter question. Have you not seen the list of the articles that I've given yesterday? In fact, I gave you one more link where only articles were there and PDF was there because some of you complained that there is no clarity in the pictures that is there in the PPT. Separate PDF was given to you. Sir, what do you mean, right, regarding this? Please have a look at it. Please have a look at the article. Right? Even though you have not read it, did you come across these articles in the newspaper? India seeks a permanent resolution for row over public stock holding. India seeks a permanent resolution over public stock holding. Where do you think the negotiations are happening? Let me know. Where do you think the discussions are happening? Where do you think these kind of trade talks will happen? At WTO. That is what is given. That is what is given as a second point. So please read. Right? It simply shows that you people are not reading. That's it. Okay. My concern is regarding that. You tell me, sir, you have not given anything on this. I will accept. I will give you content on it. But if already it is given, what is the problem in looking at it? Okay, done. So these are right a certain important points regarding WTO. Now, what is the structure of WTO? What is the structure of WTO? Two of you are saying link was not working. I personally checked the link. It was perfectly working. Please check it from your side. Two of the students are saying, sir, you gave the link, but it was not working. My dear, I have checked the link. I copied the link, pasted the link in Chrome, downloaded, was able to download the PDF. I hope you understand, right? I have checked it. If you're not able to download, then maybe something is wrong from your side. Please check it, no? Okay. So what is the structure of WTO? This is a structure, World Trade Organization. The highest decision making for World Trade Organization, it is a ministerial conference. I repeat, highest decision making authority, for WTO is a ministerial conference. Now, in ministerial conference, it is conducted generally. Please remember this. It is conducted generally once every 2 years. There is no compulsion, but it is generally conducted once every 2 years. Once every 2 years. But there is no hard and fast rule that after 2 years only you will have to conduct it. No, right? They can be conducted after 1 year also. There can be a gap of 3 years also. It has happened in the past. But traditional concept is that once every 2 years, ministerial conference is conducted. Now, please look at the name and tell me, if there is a ministerial conference, who will participate in the conference? Please have a look at it. If there is a ministerial conference, who do you think will participate in the ministerial conference? Can I say ministers? Correct or not? Ministers. But question is, which minister? Who minister? Tell me, if there is a discussion on trade, apply common sense, you will get the answer. If there is a discussion, negotiation on a trade, which minister do you think will negotiate, will be there in the discussion? Can I say commerce minister? Some of you are saying foreign minister. My dear, commerce minister. Trade, Baba. Trade. Right? Do you think finance minister is the right person to hold trade negotiations? Tell me, think of it. No, please think. Right? Please think. Right? Don't you think the right person to conduct trade negotiations from India's side in WTO should be commerce minister, trade minister? Right? You think finance minister is the right person to discuss trade? No, it is the commerce minister. So what will happen is, the trade ministers or commerce ministers of all the member countries will come together, conduct, right, or hold discussions. So that is called as a ministerial conference. But don't you think, right, these ministers coming together every day is a problem? Every day they will not have time to hold negotiations like this. So on day-to-day basis, which authority will conduct functions of WTO? Everyday work of WTO is conducted by whom then? There is one more authority below ministerial conference, which is called as a general council. This is called as a general council. And all the member countries, there is a representation within the general council. Now, this general council, every now and then, usually once in a month, this general council, every now and then, usually once in a month, or whenever there's a demand for it, will act as a dispute settlement body, and it will also act as a trade policy review body. What will happen in a dispute settlement body? Look at the name and tell me what will happen. What do you think will happen in a dispute settlement body? If there is any dispute between member countries, that will be settled in the dispute settlement body. What will happen in trade policy review body? In TPRP, the trade policies of the member countries will be evaluated, right? They will discuss how these governments are implementing their trade policies. Are they promoting trade or are they prohibiting trade? This review of the policies of member countries will be discussed in the General Council Trade Policy Review Body. So this is basically the structure of World Trade Organization. This is basically the structure of World Trade Organization. This kind of a structure earlier was not there for GATT. And that is the reason I said, right, basically WTO is better compared to earlier GATT. Done? Now, before I go forward, we'll take a break now. Right after the break, we'll start a discussion on the concept of trade barriers, and then we'll connect it to current affairs. But before that, if you have any kind of questions, please do let me know. Please do let me know. Otherwise, I'll take a break now. Right? If there are any issues with what I'm discussing, please do let me know. Who will participate in General Council? there is a representation. A person will be appointed by every member country. Generally, we'll call them as Sherpas or representatives of member countries. Ministers will not participate. A person is appointed by the government of India. Okay. Any other doubts? Any other doubts? And I've activated the call feature. If there are any questions you want to ask me, please do let me know. Otherwise, we'll take a break now. In bilateral trade, say for example, with UAE, recently I saw in the news that trade will be conducted in local currency. In this case, are we going to use both Indian rupee and UAE dirham? Right? In local currency, that argument was, if I do a transaction with UAE, I will invoice, I will receive the payment in rupees. And right, if from UAE somebody is exporting something, right, they will get the invoicing, they will get the payment in dirham. How that will be operating, that operation part is yet to be decided. It is yet to be given. Please wait. Argument is simple. Right now we move from rupee to dollar, dollar to dirham, like this. But we want to circumvent it. We want to basically address it. Okay. Anybody else? Any other question? What is meaning of competitiveness? My dear, since yesterday we are discussing it. Competitiveness means, are your products, right, are they preferred more in the international market or preferred less in the international market? If your products will become cheaper, automatically preference for your products will increase. If your products become costlier, preference for your products will go down. Right, I'm giving a call, please receive. Right, if you do not receive, then that is right, there is some problem from your side, please address it. Okay. So competitiveness means, is the preference increasing or decreasing? While comparing and promote exports, is it better to adopt incentive mechanism rather than remission? If you adopt incentive mechanism, you're violating ROD. I'm sorry, you're violating the provision of SCM. You're violating the provision of SCM. That is not allowed. Gaurav,
Good afternoon, sir.
good afternoon.
Sir, can you please explain why the rupees depreciates?
Why rupee depreciates?
Yes, sir. The,
Okay, there are
what is
multiple
the mechanism behind it?
mechanism is very simple, my dear. Imagine you're a bank manager. I am an importer. I've imported a lot of goods. I will bring rupees to you. I will sell you rupees. I'll take dollars from you. So please tell me what has happened to supply of rupees in the forex market now. Supply of rupees in the foreign exchange market has increased. So if the supply keeps on increasing like this, what do you think will happen to value of rupees? Value of rupee against a dollar will start falling down. That is how, right, the depreciation of rupee will happen.
Okay, thank you, sir.
Okay, done. Anuranjan, difference between GNPA and NPA. Right? In case of GNPA, we will count all the NPAs, whereas some of these NPAs, certain provisions are done by the banking sector. Right? If you adjust for the provisions done by the banking sector, we'll get net NPAs. Okay, done then. We'll take a break. We'll take a break. We will restart at 12:18. Please rejoin at 12:18 p.m. We'll restart at 12:18. Okay, welcome back. Can we start now? Can we start? Am I audible? Let's start. Okay, now there's a concept of trade barriers. Please understand this very carefully. Why various times in the current affairs you will come across the concept of trade barriers without realizing that, okay, it's a trade barrier. Now, what do you mean by a trade barrier? Point number one. Right? What do you mean by trade barrier? Trade barrier simply refers to a restriction. A restriction that will have an impact on how much trade is being conducted. Let's start. Trade barriers are divided into two parts. One is called as a tariff barrier. Second one is a non-tariff barrier. What do you mean by tariff barrier? Taxes will be used, right, as a restriction, and this will disrupt the trade. This will disturb the trade. Sir, what do you mean by that? Let's start. Imagine you are exporting this product to USA. The government of USA will increase the import duty on the bottle from, let's say, $10 to $50. Simple question. Follow this very carefully. Tariff means what? Taxes. You are exporting this bottle to USA. Government of USA will increase the taxes, that is a import duty, from $10 to $50. Now please tell me, what will happen to your exports? Will your exports increase or decrease to USA? Let me know. Will your exports increase or decrease to USA? All of you will agree your exports will start decreasing. Now, can I simply say it is a barrier for trade? It is a restriction over trade between India and USA. Now, is it always on exports? Is it always on exports that a barrier is imposed? Of course, no. Let me give a current affairs example. Right? We'll connect it to current affairs. Imagine you're exporting this product from India, but government of India feels if you promote or if you send more and more exports, there would be a shortage of this in India. So government of India will impose a taxes on this product when you export. Understand my point? If you export, government of India will impose a tax on it. Now let's say government will impose a tax of 500 rupee on this bottle when you export it. Now please tell me, if government will impose a taxes when you export the bottle, don't you think your exports will become costlier now? Yes or no? Your exports will become costlier. And when exports become costlier, will the competitiveness increase or decrease? Competitiveness will decrease. And when competitiveness will decrease, what will happen to exports? Exports will become less favorable in the international market. So now I hope you understand. I hope you understand the trade barriers, right? That is the first one is a tariff barrier. That is the taxes. Government will use the taxes to either reduce imports or reduce exports. That is the first type of barrier. Come to non-tariff barrier. Right? What do you mean by non-tariff barriers? Any other restriction which is not in the form of taxes. Any other restriction which is not in the form of taxes. Right? The first one, quota restriction. Understand this very carefully. Quota restriction. What do you mean by quota restriction? Government of India will tell you, you are allowed to export this bottle, but not beyond 50 units. Understand this very carefully. Government of India says you want to export it, export. But I will not allow you to export more than 50 units of the bottle. Can I say this is a quantity restriction? Let me know. This is a restriction on quantity. Quantity restriction. Okay. Now on the other side, can we impose quantity restriction on imports as well? Let me know. I've written imports, but it can be imposed on imports as well as exports. Can we have quantity restriction even on the imports? Of course, yes. Right? What if you are importing this bottle? Government of India says, you will be allowed to import, but not more than 50 bottles. Same. So quantity restriction, it is called as quota. It is called as quota. Now, before I go forward, can everybody see there is a public comment in your feed? There is a link that has been provided to you. Can everybody see that link? It is a public link. Yes or no? That is the link. That is the link for the articles. Some of the students said, sir, please post the link again. Yesterday I did not attend your class. I was feeling bored, so I did not attend the class. So please post the link again. The same link has been posted again. It's a public, right, a link. Please use it. Download the PDF. Now that is entirely left to you now. Okay, now come back to this. One is a tariff, second one is a non-tariff. Let me go forward. Let me ask you a very simple question. Which one do you think is more effective? A tariff restriction or a non-tariff restriction? Think of it. Which one do you think is right more restrictive in nature? Is it the tariff is more restrictive or a non-tariff is more restrictive? Please think carefully. Please think carefully. The non-tariff restrictions are much more right impactive or will be much more effective compared to tariff restrictions. I'll prove it. Tariff restrictions are restrictive, no doubt, right? These will restrict the value of import or export. But compared to that, non-tariffs will have more impact on the trade compared to tariff restrictions. How? Let me give a very simple example. All of you heard of solar energy in India? Let me know. All of you heard of solar energy, promotion of solar energy by Government of India? Government of India says we want to have a huge amount of solar energy capacity, right, under the total renewable energy. But if you want to have a solar energy capacity, you'll require panels, solar panels, correct? You'll require solar panels. Instead of the term solar panels, they will use a technical term solar photovoltaic panels. Solar photovoltaic cells or panels. Okay, SPV. They will write SPVs. So you will require panels. You will require panels which will absorb sunlight and convert the sunlight into energy. But the problem in case of India is we do not have sufficient domestic capacity of manufacturing of panels. Right? We do not have sufficient capacity. And as a result of this, it should not be surprising to you when I say more than 80 to 85% of these panels we started importing, and mainly the imports were done from China. Mainly the imports were done from China. So Government of India imposed the taxes. Government of India imposed the taxes, increased the taxes on the panels coming from external market. And obviously, most of them came from China. Whatever these products were coming into India, government imposed the taxes. Now, please tell me, with these taxes or higher taxes, do you think imports will be affected? Let me know. In this example, do you think with these kind of tariffs or higher taxes, do you think imports would be affected? Think very carefully. Answer is no. Imports will not be affected, my dear. Why? If the panel, rather than costing you 1,000 rupees, let's say will cost you 1,100 rupees, where is the alternate available to you in the domestic market? Tell me, where is the alternate? Do you have alternate to this in the domestic market? Do you have any other company which will satisfy the demand in the domestic market? You do not have the demand. You do not have the capacity in the domestic market. So now don't you think even with higher taxes, imports will not be affected? Imports will keep on coming into India because there is no production capacity required to satisfy the demand. But on the other hand, think of it. On the other hand, what if Government of India had imposed a quantity restriction? That is, Government of India had imposed a restriction by saying you are allowed to import panel, but not more than 100 panels in a year. Right? You are allowed to import the panels, but not more than, right, not more than 100 panels in a year. Now please tell me, don't you think this will impose more, or this will be more effective compared to the first type of a policy? Let me know. Right, this will be more effective. That is, a quantity restriction will be much more effective compared to the earlier taxation policy. That is the reason I said, please remember this. That's the reason I said, right, the idea of non-tariff barriers, these are much more restrictive in the economy compared to, right, the non-tariff restrictions. Right, the tariff restrictions will have impact, but the non-tariff restrictions will have larger impact compared to tariff. Can we go forward now? And please tell me, since you people have been preparing for UPSC exam very seriously, please tell me, in the current affairs, have you come across quota restrictions imposed by Government of India? Let me see. Since you have started preparing and you're very serious, right, students now, serious aspirants, very serious, right? Have you come across quota restrictions imposed by Government of India, right, in any of the products? If you have read the newspaper correctly, you would have come across. For example, sugar. For example, wheat. Government imposed quota first, then finally said, I will not allow any kind of export. I hope you understand. Right? One is quota. Quota means quantity. Right? Quantity will be restricted. After that, right, the next level of restriction is ban the import or export. Simply ban the import or export. For example, now, can I say Government of India has banned sugar exports? Government of India has banned wheat exports? Government of India has banned rice exports? Correct or not? Let me know, correct or not? Government of India has banned all of these exports now. So first they will try with quota. If that doesn't work out with quota, they can simply directly ban the export in order to control, right, the export, control the supply in the domestic market. Okay. So first one is quota restriction. Second one is exchange rate restriction. Exchange rate restriction. Let me give a very simple example. You want to import a Ferrari car into India. Okay, you want to import a Ferrari car. But if you want to import Ferrari car, you will have to convert your rupees into dollar. All of you will agree? You have to convert your rupees into dollar. Now, what if Government of India through RBI says, for purchasing luxury cars, we will not allow conversion of rupee to dollar? Let me know. For purchasing of luxury products, we will not allow conversion of rupee to dollars. We will never allow it. Which means, can I call this as restrictions over exchange rate? I'll give you current affairs examples as well. Can I call this as restrictions over exchange rate? And if there is a restriction over exchange rate, will it have an impact on import and export? Answer is yes, by the way. Sir, any current affairs example for this? Pakistan. In the last 1 year, the Pakistan government has actually imposed a restriction over exchange rate. Right? Remember this. It is already being tried out. Right? There are current affairs examples for this. In Pakistan, government of Pakistan did not allow for many months conversion of domestic currency into foreign currency. They did not allow it for any purposes. If you ask me, sir, why did they not allow conversion when the whole country has $2 billion? When the whole country has a $3 billion in the form of forex reserves, will you allow any kind of conversion of domestic currency into foreign currency to import something into a country? You should not allow it. All of you will agree? Second one is basically restriction over the exchange rates. Third one is administrative and technical regulations. Administrative and technical regulations. Under this, the government will impose a certain standards, right? For example, certificates which must be met by imports. Sir, what do you mean by this? I'll give a very simple example. We used to import a lot of toys from China earlier. We used to import a lot of toys from China. Government of India said, if you want to import a toy from China, you'll have to get a certificate about the quality of the toy from, right, one of the authorities in India. Very simple. right? You want to import from China, then go to one authority, right? In this authority, please get a certificate saying that the toy does not have any harmful components. The toy is friendly for the children, right? Even if they inadvertently, right, let's say chew or eat, nothing will happen to children. So go to this authority, that is Quality Council of India. Please get a certificate from this authority regarding the standard or the quality of the toy. Now, please tell me, if these kind of certification requirements are implemented, don't you think the toys will have to meet standards as per this authority specification? Yes or no? The standards will have to be met. And if these standards are not met, what will happen to imports? The imports automatically will start falling. Right? That is the reason even these administrative and technical regulations can be imposed, and these can become restrictions over imports as well as exports. Next one, government procurement policy. Government procurement policy. Government might simply tell the manufacturers half of the products you will have to purchase from domestic market. Simple question, right? Think of it. Imagine you're manufacturing this bottle. Okay, you're manufacturing this bottle. I'm the government. I will tell you half of the raw material that you purchase, you'll have to purchase it from India. Whether that is a foreign company or domestic company, I don't know. But you'll have to purchase half of the raw material from within Indian market. Right? I will not allow you to import it from rest of the world. Now, please tell me, if such conditions are imposed, don't you think import of this raw material would be affected? Yes or no? Import of raw material to produce the bottle, will it be disrupted or not? That is basically the issue regarding procurement policies. And government of India, many countries actually do this. They will have these kind of restrictions. And please understand this. Some of you will say, sir, how can government have such a restriction? Government can simply say, you want a subsidy? Can I give you a best current affairs example? You want a subsidy, you want an incentive. This is my condition, meet the condition, then I'll give you subsidy. The best example for this is production linked incentive, PLI. Right, within PLI, not specifically PLI, my mistake, not specifically PLI, FAME initiative, not PLI, FAME, faster adoption and manufacturing of electric vehicle. Half of the value addition, if these companies, electric companies, that is EV manufacturers, if they want to get incentives under FAME initiative, half of the value addition they will have to do it using domestic content, right? That is within from the Indian market. From the Indian market, half of the value addition has to come. Right? These are government examples of government procurement policies. Done. So, any problem with this? Any problem? Please do let me know. One is using taxes and disrupting the trade. Second one is any other policy apart from taxes. Apart from taxes, use anything else to disrupt the trade, to disturb the trade between countries. That is called as a non-tariff barrier. Tariff barrier, non-tariff barrier. Non-tariff barriers are much more effective compared to tariff barriers. But under WTO, please understand, under WTO, the objective is to promote international trade. Our objective is to promote international trade. Hence, we want the non-tariff barriers to be reduced, eliminated, tariff barriers to be reduced. Okay, now come to the next point here. Earlier in the class, in the previous discussion, I said the trims, GATS. Let's try and understand all of them. But before that, certain very important principles of WTO. Certain very important principles of a WTO. Anybody has any kind of a doubt before I go forward? Is the quota fixed as a half in government procurement policy? Is the quota fixed as a half in government procurement policy? What do you mean by that? I'm not able to understand the question. Quota as a concept is different restriction. Government procurement policy is a different restriction. Non-tariff barriers appears like a mental harassment. Non-tariff barriers are very, very effective. Very, very effective. Very effective in controlling trade. That is, you want to reduce the trade between India and USA rather than tariff barriers, use non-tariff. Very effective. Okay. Now, what are some of the very important principles of a World Trade Organization? Please remember, at first one is most favored nation. Most favored nation. Understand, follow this discussion very carefully. If India is conducting trade with A, B, and C, imagine India is conducting trade with right three countries A, B, and C. Most favored nation simply means India will have to treat all the trading partners in the same way. I will repeat the statement, right? This is a very, very misleading term. Very misleading term. Most favored nation doesn't mean there is favoritism. No, it doesn't mean there is a bias towards a country. Absolutely wrong. Most favored nation simply means we will not be biased towards any country. We will treat all the trading partners in the same way. There shall not be any favoritism. There shall not be any bias towards one country. We will treat all the trading partners in the same way. That is called as a most favored nation. Application of tariffs and regulations on imports or exports without any discrimination. There is a no bias, there is a no discrimination in favor of one and against one. Meaning what? Let's start. Meaning what? Imagine this bottle will come to India from country A, country B, as well as country C. All the three countries are exporting this bottle to India. Whatever regulations government of India has regarding taxation, regarding non-tariff barriers, etc., it will be same for all the three trading partners. I hope you understand this. It will be same for all the three trading partners. There shall not be any favoritism. This is called as most favored nation. Can I go forward now? Let me know. Can I go forward? Now, two very important points here. Two very important points. Is it universally applicable to all the trading partners? Is there no exception to this? Please understand there is an exception. For example, imagine India will have a trade agreement with country A now. Imagine India will have a trade agreement with country A. Can I take a current affairs example? India very recently has signed a trade agreement with Australia, correct? India very recently has signed a free trade agreement with Australia. What is FTA? You'll understand in some time, don't worry. India has signed a trade agreement with UAE. India is in talks of trade agreement with European Union. India is in talks of trade agreement with right many other countries. But what is the meaning of it? In most favored nation, it says no discrimination. Everybody should be treated the same way. But what if this bottle will come into India from a country with whom I have a trade agreement? If I have a trade agreement, I will have to provide certain exception, right? All of you will agree with me? If I have a trade agreement with Australia, what is the point of signing the agreement? I will provide certain favoritism. I will be biased towards Australia now. So now please tell me, if there is a free trade agreement between India and country A, and because of the trade agreement, what if I reduce the tax on this bottle to 0%? Is it not an exception to most favored nation? Is it okay? Is it not an exception to the most favored nation theory or the principle of WTO? So is it allowed? Is it allowed? This kind of a bias is allowed under MFN? Yes. Right? Generally, it should not be there. But what if the countries have free trade agreements? Right? What if country wants to provide a special assistance to this country? In such cases, these kind of exceptions are provided. Do not be concerned about it. These kind of exceptions are provided. Now come to the second point. India will provide MFN status to country A, B, and C. And there is one more country, let's say country F. India has not provided MFN status to country F. Now please tell me, this bottle will come from country B and C, and government of India will have a tax of 10%. Most favored nation, 10%. And the same bottle will come from country F. Can government of India charge a 50% tax on it? Yes or no? Possible? Allowed? I'll repeat it again. Arey Baba, listen to it very carefully. You're not listening. Listen. B and C have most favored nation status from India. I am saying country F does not have most favored nation status with India. India has not given MFN status to country F. Now, from the country F, if this bottle will come to India, can government of India charge a higher rate on this bottle? Answer is yes. You should say yes. You should not say no. You should say yes. Listen carefully. Why? Does country F have a MFN status with India? Let me know. In this example, does country F, does it have MFN status with India? No, it doesn't have it. And if country F does not have MFN status, why there should be same treatment with country F? Can government of India say this is not most favored nation for us? I will treat them differently. I will charge a more tax rate on this. Can I give you current affairs example? What if this bottle will come from Pakistan? Don't write it in exam, but tell me, what if this bottle will come from Pakistan? Can government of India target this product from Pakistan, have a higher rate of taxation on it? Of course, yes. Why? India has withdrawn MFN status to Pakistan. Pakistan has withdrawn MFN status to India. So we can target, we can have a biased approach towards these products. Right? Is the first point okay with all of you? Let me know. Is the first point okay with all of you? Right? That is a most favored nation. Now let me add one more exception. Please check whether this was there in the newspapers very recently. There is a term called as a generalized system of preferences. Very, very important now. I'll tell you the context. Generalized system of preferences, GSP. Please check whether this was there in the newspaper or not. I'll tell you the context. Sir, where, in which context GSP was mentioned? India's Prime Minister visited USA very recently. Correct? Prime Minister from India made a visit to USA. And there was a lot of trade discussion that took place during this visit. And one of the demand from Indian side was that India should be given status of generalized system of preferences. Those who have read the newspaper, they will know the term was there. Those who are still waiting for divine intervention, please keep waiting. Right? Maybe the divine intervention will happen. Please keep waiting. Maybe. I don't know. Right? Those who have read, definitely, as this was there in the newspaper. Check it now. Right? India-US trade discussions, when it was happening, one of the demand from India was we should be given the status of general system of preferences. What is that? Let's start. Right? Have a look at this. Developed countries. On one side, a developed country is there. On the other side, let's say there is a developed country and a developing country. And just to make you understand this, I will write examples: USA, India, and Germany. USA, India, and Germany. Okay. Now let's start. Same product. Okay. Same product will go from Germany to USA and India to USA. Let's assume this bottle. Okay. This bottle will go from Germany to USA and India to USA. Now please tell me, should USA treat both of the bottles in the same way? Is it fair for both of the countries? Think, please think. Should USA treat the bottle in the same way, which will come from two different countries? One is from a developed country, another from a developing country. Answer is no. USA should not treat both of them in the same way. Not same treatment, not equal treatment. Why? Don't you think India, because this is a developing country, USA is a developed country, USA should be providing certain benefit to India's exports compared to Germany's exports? Does it make sense to you? Right? USA should be providing certain benefit to the exports going from India compared to exports going from Germany. Why? One is a developed country, another one is a developing country. Don't you think that is your duty to assist developing countries? That is the reason developed countries have adopted a system called as generalized system of preferences. Developed countries have developed a system called as generalized system of preferences. Under generalized system of preferences, what they do is, whenever the products will come from developing countries, again, which products? The country will decide it. In this example, USA will decide it. Any product that they've identified under GSP, if it comes from a developing country, then certain tax incentives or tax exemptions are provided. Tax exemptions are provided. What do you mean by tax exemptions? If this bottle will come from any country to USA, imagine they would impose 20% tax. MFN. If this bottle will come from any country to USA, imagine USA would impose 20% tax. Now, if this bottle will come from India to USA, and because India is a developing country and identified, given the status under the GSP, government of USA might simply say, I will not impose a 20% tax, I might impose 5% tax, or I might even impose 0% tax. Now, please tell me, if this bottle will go from India to USA and will attract 5% and not 20%, don't you think this product in USA will become cheaper compared to other products? Let's say from Germany, from Japan, from other countries. Don't you think this bottle price will not increase by a larger number because the tax rate would be lower? And don't you think because of this, the demand for these bottles which are manufactured in India, in USA, would be higher? So our exports to USA would also start increasing. Now, please tell me, is it not an exception to the concept of most favored nation? I hope you understand. Is it not an exception to the concept of most favored nation? Right? Is it not an exception? Again, the answer is yes. So I hope you understand. Lot of current affairs is there regarding this. Please remember, suddenly UPSC can ask you this. Earlier, the GSP status was given to India. Earlier, it was there. USA had given GSP status to India. But when Mr. Donald Trump was the president of USA, because there were a lot of trade frictions between India and USA, Mr. Donald Trump, right, basically stated that the status of GSP will not be given to India. This will be withdrawn. And for many years now, many of the products which enjoyed lower taxes because of GSP from India, they are not enjoying these tax benefits. They are being taxed at normal rate as any other MFN product. Right? So I hope you understand. This is a current affairs. Please be very careful. This is a concept of generalized system of preferences. Now, if I use a statement, please tell me whether this is correct or not. This should be simple for you. This should be easier if you have listened to the lecture for last 10 minutes. Is the USA the only country which has the system of generalized system of preferences? Listen to my question again. Do you think USA is the only country in the world to have a GSP? Answer is no. If you remember, I used a very general term here. Developed countries will provide benefit to developing countries in the form of GSP. For example, India. There are more than 20 countries around the world which have provided GSP status to India's exports. There are more than 20 countries around the world which have provided GSP status to India. USA was one of them, but today USA is not one of them. And that's a reason very recently when Prime Minister visited USA, one of the demands that we put forth to USA government was, please provide us the status again. Provide us the GSP status so that our exports will start enjoying these benefits. Our exports to USA will start increasing. Done? Can we go to the second principle now? Let me know. All of you okay with the first one? Can we go to the second principle? Second one is called as a national treatment. Second one is called as a national treatment. Now, what is this concept of a national treatment? Please have a look at it. Anything that has entered into India, I repeat, anything that has entered into India and a similar goods which has been manufactured or produced in India, they cannot be discriminated. Right? Important. Understand this. What do you mean by national treatment? Imagine this bottle has been imported. Similar bottle is manufactured in India. Government of India cannot discriminate this imported bottle against, right, or in favor of this bottle which was manufactured in India. This is called as a national treatment. That is, you cannot have a policy separate for imported bottle, separate for domestically manufactured bottle. You cannot have those policies. That is called as a national treatment. Any problem? Right? The product which is imported, again, please understand that it could be a product, that is a good, it could be a service, it could be even investment also. So argument of national treatment is anything that will be imported, good or a service, you cannot discriminate this against a domestically manufactured good. You cannot have a different policy for this. You cannot have a different policy for similar product manufactured in the country. That is called as a national treatment. Third one, free trade. Right? Third one is called as a free trade. Right? What do you mean by free trade here? The governments across the globe will have to lower the trade barriers, so that the trade between the countries will start increasing. The trade between the countries will start improving. So these are some of the very important principles of World Trade Organization. Having understood the principles, let's look at what are the important agreements. Important, please understand these agreements. Now earlier we have discussed agreement of SCM. Yes or no, please do let me know. Right? Do you remember it or not? Earlier we have discussed agreement on SCM. There is one more agreement, agreement on agriculture. Now suddenly students will ask, what is the long form of agreement on agriculture, without realizing that we already have discussed or mentioned AOA. We'll discuss in detail what is AOA later. Now, apart from these two, right, couple of more important agreements under WTO. One is called as a GATS. Long form is a General Agreement on Trade in Services. Second one is called as a TRIPS, Trade Related Aspects of Intellectual Property Rights. Third one is a TRIMS, Trade Related Investment Measures. Let's go one by one. What is GATS? Please look at the last term here, services. So GATS, under this agreement, we want to basically promote, regulate the services trade in the international market. We want to basically have a look at how services are traded in the international market. We want to promote trade in services using GATS agreement. Now, right, what are the services we are talking about? I'll come back to this table. Please look at the picture here. Question number one. Can everybody see the picture clearly? Anybody has right a problem in looking at the picture? Anybody who says, sir, picture is not visible to me? Can everybody see the picture? Question number one, please do let me know. Question number two, I'll write numbers here, 1, 2, 3 and 4. Listen to all the 4 carefully. If you're not listening, then it's your problem. Please listen to all the 4 carefully. We will go one after the other. We will take examples for all of them. After that, don't ask me what is the difference between 1 and 2. Because if I'm giving you examples, it simply means I'm trying to tell you there is a difference in 1 and 2. After that, don't ask me what is the difference between 3 and 4. Listen to the example carefully. Let's start. First one, it is called as a cross-border services trade. Services under the GATS agreement are classified into 4 types. Very simple. Right? The services, international services, or international trade in services are divided or classified into four types. The first one, it is called as a cross border. This dark, solid, right, a dotted line, this is a border. This is border. So we have one country and a second country. Let's start. Consumer is there in the country 1, supplier is there in the country 2, or country A and country B. Neither of them, I repeat, neither of them will cross the border, but the services will be transferred across the border. Can I give you best example? Call center services. Please tell me. Call center services. Have you heard of call center or not? The customer will be sitting in USA and the call center is opened in India. Now, if I'm working in the call center, am I providing the services by going to USA? Is it okay with all of you? Am I going to USA to provide a services? No, I'm sitting in India. I will talk over the phone and provide services to the customer. And point number 2, is customer coming to India to take the service? No, customer is also sitting in USA, right? We will provide the services across the border. So neither the customer is crossing nor the provider, that is the service provider, is crossing the border. Both of them are there in different countries, but the services will cross the border. This is called as cross-border trade in services. Point number 2, consumption abroad. Consumption abroad. Let's say country A is India, country A is India, and country B is USA. You want to visit, let's say, right, USA. You want to go to Disneyland. You want to see what is happening in Florida. You want to see New York. You want to roam in USA for, let's say, 10 days. So point number 1, will you cross the border now? Think of it. Will you cross the border? Of course, yes, you will cross the border. So now the consumer will cross the border, go to the other country, and imagine you will go to USA, right? Start using cab services in USA. Start using cab services, right? Start eating in restaurants. Stay in luxury hotels. Now, please tell me, can I now say the supplier of services will not cross the border? They will provide the services in their own country, but the consumer will cross the border. Right? This is called as consumption abroad. Consumption abroad. Third point, commercial presence. Commercial presence. Right? A foreign university. Right? Think of it. Please think of it. A foreign university now will come to India, open a campus in India, and start providing education services. I'm connecting it to current affairs, by the way. If you're reading current affairs, you would know this. Government of India is now allowing foreign universities to come to India and open campuses in India. Correct or not? Correct me if I'm wrong. Right? In the last 3 months, it was there in the newspapers. Government of India is allowing foreign universities to come to India, open campuses in India, and start providing services in India. Or else, even if this is very difficult to you to understand, have you heard of Sheraton company? Sheraton. Have you heard of this? Sheraton company. It's a foreign company. Right? Have you heard of Air Asia? Air Asia is a foreign airliner. Now, what these companies have done, they have brought the money, set up company in India, and they'll start providing services in India. So this is called as a commercial presence. This is called as commercial presence. And this is the third way how international services are traded. And finally, right, presence of natural persons. Presence of natural persons. Now imagine there is an individual in India, a yoga instructor. Very simple example. Imagine there is a yoga instructor, right, from India. Or let's say there is a very good chef from India. Can I call these individuals as natural persons? Let me know. Can I call these individuals, so that is a yoga instructor, right, or a chef? Can I call these as a natural persons or a doctor? All these are natural persons. So from India, right, imagine this. From India, these natural persons will go to, let's say, USA, or will go to Australia. They will go to USA or they will go to Australia. Now, after reaching Australia, this yoga instructor will continue to provide services to the consumer in Australia. Right? One example, this yoga instructor, right, they will not join any company. Right? They will remain as individuals only. Right? They will start providing services, right, to the consumer in Australia. The chef will remain individual, right? They will not join any hotel, any restaurant, and they'll start providing chef services to individuals, consumers in Australia. Or the other way around is, these natural persons will go to Australia, join a company in Australia, and start providing the services to the consumers. This is called as right, the fourth type, that is presence of natural persons. Right, so these are the four ways through which international trade in services will be taken, and these four are classified under WTO's agreement, General Agreement in Trade in Services. Any difficulty? Can we go forward? Can we go forward? Right, as I'd expected. Sir, what is the third point? What is the fourth point? My dear, third point, a foreign company will come to India, invest, set up a service company. Have you heard of Air Asia? Let me know. Have you heard of Air Asia, civil aviation company? Let me know that at least Baba answer. Those who are asking these kind of questions, I expect answer from you, not from others, at least from you. Because if you ask me a question, I should know whether you know current affairs or not. Have you heard of Air Asia company? It's a civil aviation company. Air Asia is a foreign company. It's a foreign company. So they have come to India. They have set up, right, a company in India. Now they are providing services. Can I call this as a commercial presence? Please look at the picture. Please look at the picture. Can I call it as a commercial presence? And the fourth type, individual will go to USA, right? Will provide services as an individual in USA. Or Indian citizen will go to USA, join a company in USA, and start providing services to the consumers in USA. That is right, the fourth one, presence of natural persons. So there are four types of right, cross border services. All these four are covered under the concept of GATS. And whatever I've said so far, it is there in the table. Please go through that. Please go through table. For example, right, what did I say regarding cross border supply? Have a look at the picture. What did I say regarding cross border supply? I said customer will not cross the border, right? The service provider will not cross the border, but services will cross the border. That is exactly what is given here, right? The cross border supply will cover those services that will flow from one territory, that is one country, into another country, right? No one is moving the, right, is no one is crossing the border. Both the customer as well as the consumer, sorry, the customer as well as the service provider, both are present in respective countries. So what I've explained so far, it is there in the table. Please go through this. Okay, now come to the GATS. And there are two students who are asking what is the full form of GATS. Great, right? Two students are asking what is the full form of GATS. Very good, very good. Okay, you're concentrating very nicely in the classroom. Continue to concentrate. So GATS basically stands for General Agreement on Trade in Services. Now, what is the importance of the agreement? The GATS will basically cover different types of international trade in services, and will divide these international trade in services into four types or four modes or four classifications. Point number three, it will cover all these internationally traded services. Point number four, if you have signed a GATS agreement, if you have signed a GATS agreement, then the member countries will also have to follow the principle of most favored nation. They will have to follow the principles of national treatment. They will also have to be very transparent in their policies. In simple terms, whatever policies they are implementing, they will have to provide the information regarding the policies to World Trade Organization member countries. This is basically the importance of GATT. Now, please tell me, can you understand what is the meaning of MFN under GATS? I hope you understood this, right? Can you understand what is the meaning of MFN under GATS? Because the concept of MFN, right, national treatment, these will be present under all these agreement. These will be present in all these agreement. For example, sir, what do you mean by MFN under GATS agreement? What do you mean by this? For example, take this. Right? For example, take this example. Right? Consumption or commercial presence. Commercial presence. Right? A service sector company will come from country A into India. Into India. And a service sector company will come from right country B into India. If I have right implemented MFN status, it simply means I will have to treat both these companies in the same way. I cannot be biased towards one company. I cannot be biased towards another service sector company. I will have to treat all these service sector companies coming from these member countries which have MFN status. I will have to treat all of them in the same way. That is the meaning of the right MFN status under GATS. Done. Now next one is TRIPS. Next concept is TRIPS. One is GATS. Second one is TRIPS. What is a TRIPS? Trade related aspects of intellectual property rights. Trade related aspects of intellectual property rights. That is called as a TRIPS. Now, what is right the idea for TRIPS here? Let me give a very simple example. Have you heard of the term patent? Let me know. Have you heard of patent? Right now, basic idea of intellectual property right is simple. If you want to define, sir, what do you mean by intellectual property? Please tell me. Intellectual property means anything that is the creation of a mind. I'll repeat the statement. Anything that is a creation of a mind is called as intellectual property right. There are different types of intellectual property rights. We have patents, we have copyrights, we have industrial designs, right, etc., etc., etc. Different types of right intellectual property rights are there. Now, let me ask you a very simple question. Imagine you have invested. Imagine you have invested lot of money and you have created one technology. You have created one technology. Using that technology, this bottle can be manufactured at very, very low prices. Using that technology, the bottle can be manufactured at very, very low prices. Now, question is, should you have the right to own this technology, or should everybody in the market copy the technology and produce the goods at lower prices? What do you think? Because you have invested, it doesn't make sense to you now? Because you have invested lot of money, don't you think for certain time period, only you should be allowed to use that technology? All of you will agree with my argument? Right? Because you have invested lot of money, you have made lot of investment for certain time period, maybe for 30 years, maybe for 20 years, etc. Only you should be allowed to use this technology. Nobody else should be allowed. Now, don't you think if companies are investing so much amount of money across the globe, across the countries, it could be American company, it could be Indian company, their intellectual property rights should be given protection in all these member countries of WTO. All of you will agree with my argument? Right? You might be an Indian company, you might be an American company, doesn't matter. But when you move from one country to another country, or if you are there in this country, don't you think the member country should have a policy to protect your intellectual property right? That protection is provided under TRIPS. Under TRIPS, it applies to all the member countries. The member countries will have to provide uniform legal protection, right, for the creation of a mind, which is called as intellectual property rights. For example, does India have a law regarding intellectual property rights? Answer is yes. Does USA have a law regarding IPR? Answer is yes. Does UK? Does Germany? So argument is, right, under WTO, all the member countries, because they are signatory to the TRIPS agreement, they will have to have certain laws in order to provide protection, in order to provide most favored nation protection, national treatment protection to intellectual property rights. That is the second one, TRIPS agreement. The third one is a TRIMS agreement. TRIMS basically stands for Trade Related Investment Measure. TRIMS stands for Trade Related Investment Measure. Now, what is this Trade Related Investment Measure? Imagine you will go to USA, you will make investments in USA. Do you want government of USA to have a biased approach towards your investments? Think of it. Very simple question. You are a billionaire, you will take your money, invest in USA, government of USA will have a very bad, right, policy for you, right, a biased policy against you, whereas they will have very good policy for their domestic investments. Do you want these kind of policies to be implemented? Right? If there is no protection, can government of India, I'm sorry, government of USA do the same thing to investors from USA? They can do that. If there is no such protection, can government of India do the same treatment for USA investors or UK investors? Of course, yes. If no protection is provided, government of India will have very good policy for protecting Indian investors, but they will have very strict policy for foreign investors. They will have prohibitive policies for foreign investors. So these kind of protections for investments, for the goods, etc., will be provided under TRIPS. Trade related investment measures, right? This refers to the rules that the domestic government will apply to the foreign investors as a part of their industrial policy. It simply says that you cannot have a favoring policy for, right, your investors and a biased policy for foreign investors. You'll have to provide MFN, you'll have to provide national treatment, etc. Okay, so restriction on foreign capital, foreign investors to have same rights as a domestic investors, no restrictions on the area of investment, etc. Generally, these are part and parcel of TRIMS agreement. And under TRIMS agreement, it says every member country should have their own policy. For example, please tell me, does India have its own industrial policy? Let me know. And this is connected to current affairs. Some of you might say, sir, you have not covered anything on industrial policy. I agree. I have not covered anything on industrial policy. But in the last 3 months, have you come across one newspaper article which says government is thinking of bringing a new industrial policy? Think of it. Please think of it. If you don't trust me, type it in Google. You will get it. It was there even in Hindu. In the last 3 months, there was one newspaper article which says government of India is thinking of bringing a new industrial policy. What is the old industrial policy? We'll understand it later. There's a separate chapter on it. So government of India has their own industrial policy. So every member country should have their own industrial policy, but these should not be discriminatory. These should be uniformly applicable for all the member countries. So one is GATS, second one is a TRIPS, third one is a TRIMS. Any difficulty with respect to what we have covered so far? Let me know. Any difficulty with respect to what we have covered so far? Right, again, sir, what is SCM? My dear, how many times will you keep on asking the same question? How many times? I don't want to take the names of the students and start shaming them in front of everyone. But please tell me, how many times should you keep on asking the concept of SCM? Have I not written SCM earlier? Have I not discussed SCM earlier? And in fact, I'm telling you this for the third time now. That is actually surprising for me. That is actually surprising. I'll tell you why this happens. You will go, right, watch some movie, watch some advertisement, talk to your friends, chat in WhatsApp, and come back to the class. Suddenly, you will come across the term SCM that I've written in the top of a slide after half an hour. And now your argument is, sir, what is SCM? Where did you discuss SCM? right? Where is the term SCM expanded, etc.? Why? Don't do that, my dear. Please don't do that. Right? Be present in the classroom. Okay? Please be present in the classroom. Okay, let me go to the next one. Any issue? Any issue? Any concern? And when I say this, please don't take it personally. Some of you will take personally and start abusing me. Right? I'm not going to get offended. Don't worry, I'm not going to get offended. But don't take it personally. I'm trying to tell you that you should be more attentive in the classroom. You should be more focused in the classroom. Okay? Done? How national treatment is met in case of lack of MFN status. Right? If MFN status is not given, already, please understand, already there's a biased approach. Already there's a biased approach towards a country. Okay? Okay, can we go forward now? Any other doubts? Any other questions you people have? India has refused the investment from China. That is a violation of TRIMS. Okay. Please understand. I want to just add one more point here. Anyways, I would have discussed it later. I want to add one more point. Please tell me whether it is GATS, or TRIPS, or TRIMS. Can government of India, citing security issue, can government of India citing security issue have a policy, right, which will prohibit trade between India and rest of the world? Think of it. Current affairs, by the way. Current affairs, by the way. Can government of India citing the issue of security, right? They cite the issue of security, that is the domestic security, as an issue to violate many of the principles of WTO, and that is allowed, by the way. That is perfectly allowed, by the way. Sir, how? Can you give me an example? My dear, please read the article on laptop imports. Please read the article on tablet imports. Government of India basically said, we are concerned about security issue, right? That is a privacy issue, data stealing issue. And that is the precise reason government of India, citing the security issue, now says, you want to import a laptop, please take a license. You want to import, right, a tablet, please take a license from me. So please understand, these are applicable. No doubt these are applicable. But member countries can cite a security issue, national defense issue, etc., and implement policies which are violating of the WTO principles, which can violate WTO principles. Yes, that is allowed because the governments will have, right, said security threat, national security, national defense, etc. Right? This generally is done. This is generally done. For example, India is doing it now. Many policies have been implemented like this only. Government of USA also has been doing that in the past. Many policies they also have implemented like this only. Right? But again, please understand, when I take up the next part of discussion in the next session, I will tell you, right? Can this lead to a dispute? Can there be, right, any resolution from the WTO regarding this? Yes, there is a dispute resolution. We will take it up after the break. We'll take it up after the break. But before the break, do you people have any other questions? No direct FDI in certain sectors from border nations. Yes, right. Again, that's the reason I'm saying, citing security, citing a threat of privacy, etc., such restrictions can be imposed by the governments. They are generally allowed under WTO. Okay, any other question that you people have? Is the quota fixed as a half in government procurement? Again, Baba, you are using two policies. Quota talks about imports or exports. You are talking about government restriction, government procurement. Government procurement can be, government will say some of the goods will have to purchase from domestic market. Government itself can simply say, when I purchase half of it, I'll purchase from the domestic market only. Right? These kind of policies can be there under the government procurement. While writing about GSP in the mains exam, can we mention about UNICTAD? Yeah, of course, you can mention about UNICTAD. Okay. TRIMS threatening the foreign capital policy again. Right? You don't bring the concept of sovereignty, right? The foreign the issue, etc. Is it a policy of WTO? Yes. Can there be restrictions on this? Again, the answer is yes. Okay. Due to security issue only, India has banned around 80 China apps. Yes, right. Basically, the threat, the privacy, data privacy issue. Even in the context of laptops, again, understand the background to this. Even in the context of banning, I'm sorry, having restriction over import of laptops, one of the concern the government of India has stated is most of these laptops are coming from China. All of you are agreeing to my point now? Please do let me know if I'm wrong. Most of these electronic components are coming from China. What if there is the stealing of sensitive data from India, personal stealing data, right? So that can also happen because you're importing. What if there is already a certain component which will take your data and start transmitting it to foreign countries? So security issue, data theft issue, data privacy issue, generally these are the things which are cited by the government to impose such restrictions. Any other concern? Any other issue? TRIMS basically stands for Trade Related Investment Measures. Under trade related investment measures, the governments will have industrial policies, but they cannot have an industrial policy which is discriminatory for foreign investors and which only promotes domestic investors. Such a type of investment policy should not be there. At what time the class will end? My dear, 8 p.m. That class will end at 8 p.m. Sir, whether USA has removed GSP? Yes, USA has removed GSP status for India. It has removed the GSP status. India does not have GSP status from USA now. If anybody wants to give me a call, I've activated call feature. Please do let me know. Is anti-dumping duty and countervailing duty acceptable to WTO? Yes. Yes, these are acceptable, but please understand they can be challenged. You'll have to give reasons for it. That is a precise reason. Please check. Please check. When I discussed the idea of anti-dumping, countervailing, safeguarding, etc., I said generally there is an investigation conducted. Generally, before these types of duties are imposed, investigations are conducted. And once investigations are conducted, there is a proof, there is a documentation which says that, okay, there is a dumping activity, hence we are imposing anti-dumping. Yes, there is a problem regarding continuous import of these products. Hence, we are imposing this duty. That is the reason this process is conducted. Shahnwaz, please receive the call. How many members are there in WTO? More than 150 members are there in WTO. Is GSP against GATT? No, my dear. GSP is an exception. GSP is an exception. Right? It is an exception. It is generally a status provided by developed countries to developing countries, not to everyone. Developed countries to developing countries. Okay. Abhijit, please send a mail to me. Please send a mail to me. Right? I don't know which videos are missing. Please send a mail. Okay. Done. Done. Can we take a break now? Shahnwaz, please receive the call. Okay. Done. So let's take a break now. We'll restart the discussion at 2:30. We'll restart the discussion at 2:30. Okay, we'll meet again at 2:30. Take a lunch break now.